India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. And I think today I can say TGIF. Thank God it's Friday. Last Friday one could not say it because Saturday was working. But today, of course, you go into a weekend. And what a way to go into the weekend if there is follow through from yesterday's session, right? I mean, I think that's the talking point. Can the market sustain what we've begun yesterday, broken out of this consolidatory pattern that we've been in for the last many weeks? I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And it's what, a 1,000-point rally that the market has seen in 8 trading sessions, right? So phenomenal move, sitting at record highs. But this morning, I think the global markets may spoil the party a little bit. But be that as it may, this has been an out-and-out buy-on-dips market.
Well, that's right. The US markets couldn't keep up overnight, right? And, this weekend is something that you're particularly looking forward to because next week you get into the final week of earnings. Of FY24 earnings. So it's been quite exhausting. We've got 5 more sessions and then we are done with it.
And about 30 companies to talk to in between from
maybe
now
more
on.
than that. Little more than that.
All right. Well, let's just take a quick look at what you need to know as we begin another session. Yesterday was a mix. It was a powerful mix of two things. Very strong buying in the cash market from FIIs. Plus, as data showed later in the evening, there was a lot of short covering as far as index futures are concerned. And put the data up for you. So FIIs bought about 4670 crores in the cash market. And in the futures market, they cut their short positions. They'd been net short on Wednesday to the tune of about 2.2 lakh contracts. That number fell by over 1 lakh contracts. So they cut shorts of over 1 lakh contracts. And that number is now about 98,000 basically. Contracts short, right? So that is a lot of short covering which played through in a single day. Now, the point is if you go back and look at this data over the last 1.5 years or so, and I've only looked at the recent sort of data, which is the last year and a half, once, from extreme levels, and we still at 2.2 lakh contracts net shorts FIIs, we are still not at the absolute extreme lows. The highs that they've had on the short side. But at this, of course, is at one extreme. So from an extreme, when the short covering starts and a powerful short covering like this starts, what we've seen in the previous, at least 2 instances that I saw, is that this could continue all the way, that shorts are covered, and then you go long. You reach a bit of an extreme on the long side as well. Now, this has happened, of course, right before the election results. So it kind of makes this setup all the more interesting. What I'm saying actually could very well play out depending on, of course, the election results, or like what we saw yesterday, what we've had is basically the beginning of this election rally, the market sensing that there perhaps is going to be political continuity, etc. I've been saying this, markets typically get the direction of the election result right. Broadly, the direction of the election result right. And I think that confidence is starting to build. And so keep an eye out on this one. From an extreme position, when covering starts, it could take you all the way into zero. And then, a bit of an extreme on the upside as well, on the long side as well. Overnight, as we've been discussing, the Qs were a little sort of softish. Dow was down 1.5%, S&P down 0.75%, NASDAQ is down about 1/3%. But almost immediately, I want to also contrast something which is of importance. To put this in context, year to date, the NASDAQ is up 13%. We are up 5.5%. The reason I'm sort of contrasting Nifty with the NASDAQ is because these are, along with, I think, the Taiwanese market, they're some of the most they have been the most tightly correlated markets for the last 3.5 years now. So when you look at day-on-day dips in the US, you've got to also keep in mind that the market has obviously done much better than what we've done here. Just a few sort of run through on rates, dollar, etc. Rates went up, the yield went up by about 5 basis points. Dollar index was over 105. It ended over 105, so but not very much. Data is basically what pushed yields higher and the dollar higher. So jobless claims were lower, and the US PMIs which was also nuanced, but broadly they beat expectations. On the services side, the labor component is weak. For the second straight sort of month in a row, that number is under 50, and services inflation is sticky. So I think there is a nuance here, but for our purposes, when we're looking at day to day, this was read as slightly hawkish. Now, oil prices, they continue to drop. This week has been good. If you're looking for oil prices to drop, we are now at about 81.5 dollars per barrel mark. So that's basically the setup as far as global cues are concerned. Equities were lower, but I wouldn't read too much into it in that sense. There is one more thing, and I think you would have seen headlines from global media, etc. China conducting large-scale military drills near Taiwan. Of course, it's been China's long-standing stance that Taiwan is a part of China, and any calls for independence, etc., there are moot. That's their sort of point of view. These are, of course, military drills which are planned, and large-scale military drills which are planned around Taiwan, which is, of course, being closely watched. Now, just to come back and circle back to levels here, Nifty decisively closed above yesterday the previous high, which is 22,794. That's point number one. And we've been saying, right, line of sight to an all-time high. It happened yesterday. The trend line resistance is at 23,125. You basically connect the earlier highs and sort of extend that line up, and that meets the Nifty at about 23,125. That's the immediate first level to watch out for. Supports come in at the 20-day, which is 22,420. Bank Nifty is outperformed yesterday. It broke above the previous high. Of course, on the back of that, our big RBI dividend, the cool-off in yields the day before, we were highlighting how banks perhaps could have a bit of a positive day. Continuing from, by the way, on the RBI announcement day, the market had already responded. Bank Nifty had recovered quite a bit from the day's low, so that continued in a big way with that 2% pop. Closing above 48,832 will open up the line of sight to the new high there, which of course is around the 50,000 mark, just under the 50,000 mark. And support on the Nifty Bank is the 20-day, which stands at 48,298. So that's essentially the picture. It's not a very, Asia is down and US is down, etc. But I think we've been sort of falling because of our own issues and, of course, the fear around elections and emerging market flows, etc., being negative. Could that turn at the margin? I think that's all that you would need. The GIFT Nifty is indicating a slightly lower start, about 25 points. Sonia.
Oh, absolutely. I think this market is an out-and-out bull market, a buy on dips market, right? That strategy has worked every time, even in the month of May, if you look at it, right? From the lows that we saw in the month of May. In fact, the Nifty is now, has climbed about over 1,000 points in the last 8 trading sessions. We'll talk about that. But yesterday you saw both foreign and domestic investors buy in the cash market, so which is a very good thing. FI has bought in huge quantities, almost 5,000 crores. DI has bought about 150 odd crores. And yes, the US markets were under pressure overnight, but the important bit is that our own markets have been playing catch up to the US markets and the rally that we've seen. In fact, Nvidia, post those very strong numbers, was the big mover in trade overnight as well. So as I said, it's a big rally that we've seen in the last 8-9 trading sessions. Even if there is a dip because of global cues, that could get bought into. There are lots of things working in our favor, whether it is the expectation of policy continuity post the elections, whether it is positive global cues, whether it's good earnings, the pickup that we've seen across several sectors. So 2 stocks that I'm looking at this morning. One of them is Interglobe Aviation. It's the 6th consecutive quarter of profitability that the company has reported. And, a lot of brokerages bullish on the stock. In fact, Morgan Stanley has titled their report Indigo 2.0, and they speak about how this stock is the cheapest as far as valuations in the travel and tourism sector. They've raised their target price to 5,142 on Interglobe Aviation. So big upside despite the rally that we've already seen. The other one is Honasa Consumer. Very good numbers coming through, strong growth, much higher than the industry. It was a 27% volume growth that Honasa has seen. They've reported a profit of 30 crores. So it's a turnaround quarter for them compared to a loss last year. So my eye will be squarely on that stock. And banks are coming back as well. We are seeing the first signs of delivery-based buying, especially in the large private sector banks. So just keep an eye out on whether banks assume leadership in the next leg of this run-up. So that's the big question that we're asking. So overall, record highs for the market. Yes, some, trepidation here and there, but otherwise it's been a trending up market.
Well, that's right, Sonia. And it's quite ironic. Yesterday, if you asked many people about their portfolios, they said, my portfolio didn't move much. Because most of the portfolio as of now are towards the mid-cap names. And yesterday was the day of the large-cap names, the frontline Nifty and the Nifty bank stocks. And what took place? It was a massive short covering bounce that we saw. The Nifty, there was some fresh long addition. But on the Nifty bank, you had open interest that was down by close to around 4%, telling you that there was a bounce that played out. And pull out the FI data. What do the FIs do in the F&O market? Just take a look at that. That's a swing factor of more than 1 lakh contracts because they covered 35,000 shorts. They added close to 86,000 long positions. And now the short positions have come down to around 58%. A few sessions ago, it was at around 72%. And in absolute terms, the short positioning got cut in half in a single trading session. That's the power of short covering, right? You had close to 2.2 lakh contracts at the start of the trading session on the short side from the FIs. They got sliced into half, less than 1 lakh contracts. So big short covering bounce is what played out yesterday. The options data, now these strikes, they'll expire in the coming Thursday, which will also be the monthly expiry. So we had good amount of put trading, more than 70 lakh shares getting added out there between both these two. 22,800 put, 22,700 put. And between them, there was a fair bit of open interest build up, which brings us to the levels. Going by the options data, going by the recent resistance level, that in fact becomes a bit of a support zone. And because of the put writing that we've seen, now the PCR has moved to around 1.37, but it peaks out around 1.65 odd. So we have some distance to go on the upside. That's a support zone, which earlier was a resistance zone. So that's the crucial mark out there. If you're going long, you're buying the dip, well, this is the level you don't want to get violated on the downside. The Nifty Bank yesterday took out the 50 DMA, took out the 20 DMA. It was on its way to around that 49,000 odd mark. So the reference point on the downside will be the 20 DMA, which it faced a couple of hurdles out there. And fresh all-time highs could be on the cards. The Nifty Bank is coming back into form, and that's the one that could drive us higher. What are the stocks that I'm looking at? I'm looking at two stocks from the F&O pack, first of all. Two stocks that come out of the F&O ban. Vodafone Idea, you have an UBS upgrade as well. So that's going to be important. Biocon as well has seen an interesting price action. Both those two should be on your radar. And from the cash market, IMFA, I'm tracking that stock because yesterday it did see a sharp correction post its numbers. But the delivery number was much higher, closer to around 3.5 lakh shares, which compares with less than 1 lakh shares that we have seen on an average for the past month. And, just going by the delivery data, there has been one large seller in there, which has been gradually selling. If you just look at it from 6% over the last few quarters, it came down to around 1 lakh shares approximately. And going by yesterday's delivery data, it'll be interesting to see whether or not that got cleared out in trade yesterday. So one big seller getting out of the way is important. And fundamentally, well, the Q4 numbers, it appeared it was very weak, but there were a couple of adjustments that they put post-market hours. So that's one factor. The other factor is valuation-wise, it's more or less stable. Ferrochrome prices have been strong. So I'll be interested to see whether or not that stock can bounce back in some way. It ended at the 20 DMA.
All right, thanks a lot for that. Well, on the equities front, we have a comment coming in from Rhythm Desai of Morgan Stanley, who says that a lot of foreign investors are waiting for India's headline multiples to decline before increasing their participation in Indian stocks. However, aside from any negative surprise out of the June elections, he sees no other triggers for a derating in the near term.
Okay, so money market views here. On the rupee, we have Lakshmanan V of Federal Bank, who says that the US FOMC minutes indicated members are concerned over sticky inflation and the restrictive policy may be maintained at least until September. The Indian rupee inched up to its highest level in nearly 6 weeks due to likely intervention by the RBI and dollar sales from foreign banks. In the upcoming sessions, he expects the USD INR to trade in a range between 83.2 to 83.65 to the dollar.
And on the bonds, Lakshmanan says the Indian 10-year bond yield declined to 11-month low, falling below the 7% mark after frequent buybacks by the RBI and surplus transfer of record 2.1 trillion to the central government for FY24. This may lead to a potential cut in the market borrowing. Foreign inflows amidst bond index inclusion program may aid to further softening of bond yields in the coming sessions. The 10-year benchmark bond yield could trade in a range of 6.9 to 7.05%.
Well, we've got a lot of stock specification to track for you. We'll get to that in just a bit in our special top 10 segment. For the time being, we run you through the list. Interglobe, HCL Tech, Fortis Health, you have Hunasa, Bikashi Foods, JK Lakshmi Cement, CESC, Zaggle Prepaid, UPL, and Aarti Industries. So we're expecting all 10 of them to open up with a positive tick.
All right, well, that's basically what's coming up here in just a bit. Peter Cardillo is Chief Market Economist at Spartan Capital Securities. Peter, good to have you with us here. Thank you very much for your time. Just a quick word on the US action overnight. And by the way, I was kind of referring to this tight correlation over the last few years between the Nifty and the NASDAQ. It's been true. I mean, two best markets, one the emerging world, and the other one, of course, in the developed world. And this year, the NASDAQ is up some 13-14%. We are up about 5.5% odd. Just your thoughts on that as well, Peter, if you track that.
Sure. Well, to begin with, we had a very nasty session yesterday on Wall Street, and that was due to the fact that yields backed up. And of course, now there's the market is looking forward, and the realization is that yields are probably not going to be cut until the latter part of the fourth quarter. But, that really wasn't a surprise, I don't think. That's been now the projections over the past, let's say, 6 or 7 weeks. But I think, what really prompted the market to slip was the fact that the market was ripe for some sort of a pullback. And of course, the yield factor, rising yields, gave the market what it needed to pull back. And so I think as we go forward, we'll probably see that the Fed minutes, of course, they related to what happened 6 weeks ago and not presently. So I think next week, when we have the PCE price inflation index, I think we'll probably see a notch to lower rates, and that probably will relieve the market somewhat. In terms of the emerging markets and the U.S. markets and the differential in the rise in the Nasdaq, I think that can be addressed by saying that we've had a strong earnings season, and most of the big tech stocks reported better than expected earnings, and I think that may have been one of the reasons why we see this divergence. However, it's not anything new. It's consistent, so I really don't put too much into it.
Okay. Do you want to leave us with one word on how to approach Asian economies like India, Peter? Because, we're having a good run so far. A lot of things are working in our favor, whether it is the growth picking up, crude prices are lower, earnings are picking up as well. And the expectation is that there will be policy continuity post the general elections, the counting of votes on the 4th of June. Your thoughts on how to approach it from here?
Well, I'm very bullish on India. I have been, and I think that it's just a matter of time before India becomes the number 2 economy in the world, especially in the tech sector. So, I think it's going in the right direction. Of course, there can always be a foul play somewhere along the line. Maybe the elections might not come in as warranted. You might not have inflation to stay too low, even though it's going into the right direction. So there's always some foul play along the line, but in general, your economy is doing well, and I think there are great perspectives for the country and for the stock market as well.
All right, Peter, we'll leave it there. Thank you very much for your time. Great speaking with you. And, it's always good to sort of get that perspective across. We'll take a quick commercial break here. We'll be back. Our list of top stocks to watch out for with our research team coming up next. Stay with us.
Welcome back to Bazaar Morning Call. Yesterday we saw record highs for the market. This morning we are slightly soft because of global cues, but I reckon that this market has momentum going for itself. So don't be surprised if the dips get bought. Now, Indigo is a stock on my radar this morning. Very strong numbers coming through. It's the 6th consecutive quarter of profitability that Indigo has reported. But no surprises, with the way the travel industry is booming, this was bound to happen. Very strong growth. Revenue growth of 26% is what the company has clocked in. EBITDA margins have improved to almost 25% versus 20.9%. So these are the EBITDA margins I'm talking about. And we have the net profits at almost 1,900 crores versus 900 crores same time last year. Now, all the internals are looking good. The passenger growth has come in at 14%. The load factor has improved to 86.3%. The yields are up almost 7% year on year as well. Now, Morgan Stanley put out a note where they have an overweight on the stock and they've increased their target price to 5,142. They say that this is one of the cheapest travel-themed stocks currently. Any dip is an opportunity to buy, and the company has guided for a 10 to 12% growth in the average seat per kilometer. So I'm going with green on Interglobe.
No, things are so good. They're actually handing out pay increases. Did you see the Air India news?
Yeah.
Air India is handing out more money to staff. Yeah, I think Indigo did the same thing. I think some bonus they announced.
Yeah.
So, airlines not used to making...
After so long, right?
Yeah, I mean, not used to having the environment so good.
Did you ever want to be part of the aviation industry, Prashant?
Not yet.
Did you ever in your... I wanted to, but I didn't make it. All right, let's go across to Reema. Reema joins in to tell us about HCL Tech. Reema?
So HCL Tech has made an acquisition which will strengthen their telecom vertical, and they will be spending $225 million for the acquisition. So they will be acquiring assets of HP Electronics, HPE, and they will be acquiring the Communications Technology Group. As I said, this will strengthen their telecom vertical. They're paying $225 million in cash, and this will provide the company access to 20 out of the large 30 communication service providers, and also helps them expand their geographical footprint into Japan and other areas where HCL Tech is a little lighter in terms of presence. But we do not know, since they're acquiring an asset and not an overall entity, the revenues of the acquired company are not divulged. Back to you.
All right, Reema, thanks very much for that. Fortis Healthcare will also be in focus. Actually, a bunch of hospital companies today, but Ekta is here with details on this one. Ekta, morning.
Well, yes, I expect Fortis to probably be in the green today because there's a margin improvement which has come through. So the revenue was up around 8.7% year on year. Margins on a blended basis came in at around 21% versus 16.5%. Profits 178 odd crores versus 132 odd crores. And Q1Q also margins were 21% versus 17%. The hospital business really drove the revenues up this time. So revenue was up 10.3% and margins improved all the way to 22.4% versus 16.4% for the hospital business. Diagnostics was sluggish. Revenue was up only 1.3%, margins at 16%.
Okay. All right, Ekta. Thanks a lot for that. Well, let's go across to Manglam. Manglam's here to tell us about Hunasa as well as Bikaji Foods. Manglam.
Good numbers coming in for Hunasa. Remember, when the IPO had come by, the management had said they're targeting 2x industry growth. The company has gone ahead and grew at 3 times faster than the competition, with underlying volume growth at around 27% in the fourth quarter. So revenues for the company grew about 21.5%, gross margins at 70%, an improvement over last year. And as a result of which, operating leverage played out as well. The EBITDA came in at around 33 crores versus a loss. And on the bottom line, the company reported a profit of 30 crores as well versus a loss of 16 crores. They've gained market share in key products, face wash and shampoo, increased their offline reach as well as added new products at 18% of their FY24 sales. So all of that points towards positive direction for Hunasa. For Bikaji as well, the reported numbers were actually aided by a 94 crore PLI income. If you adjust for that, even then the numbers aren't bad. 14% volume growth in the fourth quarter, revenues grew around 13%, the EBITDA grew 10%, and the net profit for the company as well grew by about 22%.
Okay, Manglam, thanks a lot for that. Well, I'm focusing on JK Lakshmi Cement, and over the years, the company has been adding capacity. Now the capacity is at around 16 million tons odd. On a company of that size, well, they delivered very good numbers actually. Though on the top line, there was a bit of a degrowth because volumes were lower. Pricing, as we know, realizations were down by 4% on a quarter-to-quarter basis as well. So the beat that's come about on the EBITDA front is because of their focus on cost. The margins have expanded on a sequential basis, which is a rarity in this earnings season itself for all cement companies because, they have been struggling with regard to the lower cement prices. And their focus on the cost optimization, whether it's WHRS or whether it's on the solar side of things as well, is clearly evident because the power and fuel costs were down by 22%. Transport costs as well were down by close to around 9%. So at current reckoning, it trades at around $82 per ton, and these numbers look better than expected. Well, so I'm going with green on JK Lakshmi Cement.
Okay, green on JK Lakshmi Cement. CESC is the other one we're looking at this morning. Vivek is here to give us the latest on that. Vivek, over to you.
Well, good morning. CESC is the stock in focus. The company declared its results yesterday evening. A lot of one-offs in the results, but post all of the adjustments are largely in line with what the street was anticipating. So revenues higher by close to 9% on a year-on-year basis, coming in close to the 3,387 crore mark. EBITDA higher by just around 3% this time around, coming in at the 982 crore mark. Margins, on a year-on-year basis, slightly subdued 28.9% versus 30.75% again last year. Now, talking about the profitability down by 7%, that there was a one-off that actually impacted the profit. What was the one-off? The company saw Kolkata Port Trust land lease renewal expense of close to 100 crore, which impacted the PAT. Now, talking about FY24, the regulatory assets in Kolkata went up almost by 1,000 crores, so that was a good part. The negative part as far as FY24 was concerned was the company has been looking for a tariff hike for quite some time, still hasn't got one since FY19.
All right, Vivek, thanks very much for that. The CESC. But Zaggle Prepaid also sort of came out with numbers. We have the management with us later. Interesting company, good set of numbers. Abhishek has got details. Abhishek, morning.
Morning, Prashant. So strong P&L momentum that you are seeing YOY and quarter-on-quarter. However, margins have declined and lower than the guidance that they had given. So if you take a look, revenue is up 46.3% YOY and 37% sequentially. Adjusted EBITDA before ESOP is up about 9.2% YOY and about 19% sequentially. The PAT has come in at 19.2 crores, which is up 153% YOY and about 25.8% sequentially. The users on platform over there, the addition have been strong. That's grown by 20.3% YOY and about 6.6% sequentially. However, adjusted EBITDA before ESOP is at 9.95% versus 13.3% in the same quarter last year and versus 11.5% in the previous quarter. And this is also below the management guidance of 11 to 13% band that they had given us last time in the interview. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. In fact, we have the management of Zaggle Prepaid Ocean Services that are joining in at 10 a.m. later today. Well, let's go across to Sudarshan. He is here to tell us about the news flow that came yesterday post-market hours on UPL and Aarti Industries. Morning, Sudarshan.
Morning, Nigel. So both these companies have announced formation of a JV named Origin Chemical, and the Origin Chemical will develop, manufacture, market downstream and value-added chemical intermediaries. Talking about the internals, both these companies will initially invest rupees 12.50 crore each in this company, and over next 24 months will be investing rupees 137.5 crore each, and this investment will be via equity capital, preference share or debt. And this JV is expected to commence commercial supplies by Q1 of FY27, and peak and annual revenue potential is seen in the range of 400 to 500 crore over next 2 to 3 years. Talking about this JV, Aarti Industries says this agreement is built on synergies and competencies for manufacturing of critical chemical products, and UPL says collaboration is in line with broader strategy of expanding into downstream derivatives. So overall, positive for both these companies, and I'm going with green.
Okay, thanks a lot, Sudarshan, for that. Here's a quick recap of our top stocks with positive news flow. There's Interglobe Aviation, HCL Tech, Fortis Healthcare, Honasa Consumer, BKG Foods, JK Lakshmi Cement, CESC, Zaggle Prepaid, UPL and Aarti Industries. Well, guess what? There's no stock on our radar that's likely to open in the red. But, well, let's see how the market shapes up. For now, the GIFT Nifty is down about 22 odd points. But let's also get you a quick action, that's taking place in the commodity markets. Brent crude has been moving lower for a while now. Let's find out what the latest is today. Manisha Gupta is joining in. Manisha, hi, good morning.
Thank you for that, Sonia. Well, yes, I'll talk about the crude oil prices, which are down for a fourth straight day today, and it's a 3-month lows for the Brent and the US crude prices, both the varieties. Prices are down by 4% in this week itself, and with the prospects of higher for longer US rates, that really seems to be damaging or dampening the bulls in the commodity market. So almost everything is trading yet again in red in the Asian markets right now. But for the crude oil prices, it also is about the US crude inventories, which have surged yet again for a third straight week. The US gasoline demand also seems to be slightly on the weaker side. The OPEC and allies will meet on 1st of June, and that is where the markets will watch out for the next cues. But various reports, including interesting. Citi and UBS latest report says that they are anticipating Brent prices at $90 and $91 in the coming few months. So the markets do believe that we are looking at a higher global demand growth. The deficit in the next quarter could actually just about, see some more engaging, and that would lead to higher prices in the coming days. But as far as the metal prices are concerned, well, this is an area where you have seen healthy correction continue. So whether it's about copper, zinc, aluminum, gold, silver, we are looking at another 0.5 to 1.5% of a cut coming in yet again in Asia.
All right, Manisha, thanks very much for that. Three strongest commodities, right? Copper, gold, silver. Taking a bit of a break over the last couple of days. Manisha, thanks very much for that. But, there's one more stock we want to focus on, Biocon. There was a flash at the bottom of the screen. So, Ekta, tell us more. Significant?
Well, yes, it's important because they have signed up with a South Korean company for liraglutide in South Korea. Now, remember, liraglutide is a part of the GLP-1 drug inhibitors, and they have just received approval for liraglutide in the UK. Now, liraglutide is a part of the GLP-1 drug inhibitors, but it is not as popular as semaglutide as well as the Eli Lilly drug, which is tirzepatide. So, while it is definitely an important approval, it's probably not going to have as much potential as those other molecules. But the important part to note about Biocon is that they are making strides when it comes to the GLP-1 drug environment much faster at this point in time as compared to the other Indian companies. And that's probably going to be a differentiator for Biocon. When we did speak to Biocon earlier on the Q4 numbers, they said that GLP-1 drugs should probably start showing in their P&L FY26 onwards.
Okay, thanks a lot, Ekta, for that. Let's take a quick break. On the other side, so many stocks to discuss. Siddharth Khemka of Motilal Oswal Financial Services will be with us for some fundamental stock analysis. Stay tuned. Okay, plenty of stocks to talk about, so let's get straight to it, right? We have Siddharth Khemka, Head Retail Research at Motilal Oswal Financial Services joining in. Siddharth, hi, good morning. Thanks for being with us. I wanted your thoughts on Interglobe Aviation. Very strong numbers, good commentary from the management. Brokerages are excited about the stock, but the stock has also run up quite a bit. At what stage of the rally are we in right now, and would you recommend buying it even today?
Yeah, very good morning, Sonia. Pleasure to be on the show. I think if you look at the overall aviation as well as the overall tourism industry, that has done really well. And after a long time, we are seeing the healthy performance from the aviation sector where they are reporting profits. In terms of the numbers, very strong numbers from Indigo. Revenue was up 26%, 8% higher than our expectations. Net profit of almost 19 billion, which is 1,900 crores, which is again Y&Y up 2x. So what is good is that the management commentary continues to remain very strong. They are adding capacity, so they have suggested that they would be adding one new aircraft every week on an average in FY25. They are also looking at international markets as a growth strategy, which is helping them a lot, especially in terms of the profitability, because the yields are better and the routes are profitable. So that is another point which kind of gives a strong outlook for Indigo at the current juncture. So overall, we are positive. We believe that the Indian aviation industry is underpenetrated and offers significant growth opportunity for domestic airlines. The potential is also because of the expanding airport capacities as well as the significant aircraft orders that these players have put in. Now, in terms of valuation, yes, the stock has definitely run up, and there is risk of the competition coming up from some of the newer players and some of the you have Air India now be taken over by Tata. They are becoming aggressive. That could be a competition. Crude oil prices continues to remain a key variable for the aviation sector. And while we overall remain positive, we believe that at current juncture, there is a limited upside, and hence right now we have a neutral rating. But I would say that in the near term, on back of strong numbers and the positive growth numbers that in Q1, Q2 that the company will be reporting, the stock could continue to be in momentum.
Okay, all right. Hi, Sid. Morning and good to see you. Well, what about the hospital companies? You know, Fortis, many other companies, Max, all of them delivering very good numbers. The fear is that are things peaking out in terms of the RPOBs, in terms of the margins as well? What's the pick from that pack?
Yeah, Nigel, good to see you. So if you look at the healthcare space, we have been very positive on that space. Numbers, as you rightly said, are coming out to be very strong. And after a long time, if you see that despite the healthcare issues are not that much which we had seen earlier in the COVID cases. So now there's an overall structural improvement that we are witnessing in the overall healthcare companies. And within that, Apollo, which is the leader in the pack, we continue to like that. Which is our top pick, preferred pick within the overall hospitals. We have a target price of 7,300. What we also like is a Max Healthcare. The company is a mid-cap company. We are seeing a strong expansion from the company, and the profitability and EBITDA are seeing strong improvement. So we are expecting almost a 25% CAGR in Max Healthcare earnings going forward. Valuations are still comfortable. If you look at on an EV/EBITDA basis, some of these do trade at a premium, but we believe that with the growth and improving profitability, return ratios improving to about 17-18%, a Max Healthcare could also be looked at. The stock has run up, so we have a target price of 950, so about 10 to 15% upside there as well.
Yeah, check out Medanta as well. Medanta is also, I mean, since you're talking about hospitals, Medanta has fallen from 1,500 to 1,200. That's another very strong hospital sort of company based out of North India. Gurgaon, of course, the big flagship hospital there. Global Hospitals, that's the name of the company, the Medanta Group. Well, Siddharth, morning, Prashant here. Just a quick, do you track Zaggle, by the way? Does Motilal have coverage? Zaggle
morning, Prashant. So we have not yet covered on Zaggle.
Okay, all right. Again, very strong set of numbers as we were outlining earlier. So to your clients, Siddharth, you know, so election results are 5 days away and people are starting to wonder what is the best way to play a positive outcome, right? Because it's a light market and we are at new highs, given, of course, yesterday's rally now. But still, I mean, you know, immediately post results, they could be, depending on the results, they could be a move. So what are the best places to be in? Is it PSUs? What are your thoughts, Sid? If you've discussed that and your team's sort of thinking on this.
Yeah, Prashant, I think it's a right question to ask because this is what exactly the clients are asking us. If the current government wins back with a good margin, what sectors and what stocks should we play in? So I think the pet sector is the capex theme that we like, and that is clearly associated with the ruling NDA government, right from your infrastructure. So you have the likes of Larsen. It is a large cap. It doesn't have that kind of high beta. So even if things were to remain volatile, I think being focused on infra and on the large cap side, that gives the kind of a margin of safety. So capex theme, that is something that we like. So we like, as I said, infra. Capital goods is another theme that kind of clearly gets linked. So again, L&T, but some of the other capital goods like ABB and Siemens comes in there. Cement, real estate, and some of the other construction companies. I think that is the pack that clearly would benefit out of if the government continues to come out with on strong numbers.
Okay. By the way, we have a management also joining us. So Siddharth, just wait by. It is the management of Subros that manufactures automotive air conditioners across segments, whether it's passenger vehicles, commercial vehicles, even for the Indian Railways. Their net profits went up 66%. The margins expanded. It was a decent set of numbers, actually. The company ended FY24 with a near 10% top-line growth. P.K. Duggal, the CEO at Subros, joins us now to talk about that. Mr. Duggal, good morning. It's been a decent year for you. But in FY25, tell us, can you manage to do double-digit growth on the top line? Also, where are you seeing maximum orders coming from now between passenger vehicles, commercial vehicles, or even railways?
Thank you for having me on your show. Yes, FY24 2024 was a good year for us after 2-3 years of muted growth. But FY25 need to be watched, I think, for next 2 quarters because there is a lot of uncertainty in the market. There are a lot of geopolitical issues which are on right now. Half of the world population is going through the election, so it may take another two quarters to stabilize on certain assumption. But yes, as Sugro's, we are targeting for double-digit growth even in FY25 based on the orders in hand. As you mentioned about from where these orders are coming, past vehicles, we have certain new orders from various customers, especially in the EV space. And truck market is another good area where the expansions are possible because of this new notification which is now in place for N2, N3 categories require air conditioning systems. So we are on with our customer for final negotiations. So these are the two domains where the maximum growth will come.
So for just one follow-up, in both EVs and the truck market, right? EV market, what is the contribution right now? How much can it go up to? And in the truck market, since the new rules have come into place, what kind of opportunity do you see over the next 12 to 18 months?
So EV is an evolving market in India right now. Overall, out of the total past vehicle, only 1.5% is the EV contribution right now. There are estimates that 10 to 15% by 2030, this EV market will contribute to the overpass market. Second, on truck market, since this notification is now rescheduled to October 25 SOP. So there's a huge market which is available, which will shift from blower to aircon. So maybe around market size of incremental market size around 200, 250 crore is available. And we are trying to take a large chunk out of that.
Okay. All right, sir. Good morning. Prashant here. Now, you said double digit in FY25. Would this be sort of barely double digit? Would this be sort of a strong double digit? Can you be a bit more specific? That'll help.
Very difficult to be very precise, but as I mentioned, there is a quite uncertainty, and we are looking at a very moderate growth in the auto market as of now, but it will be in early double digit.
Early double digits. Margins, sir, came in at about 8.6% for the full year. Could you tell us what your expectations are there? Would you be able to grow that, or you think it'll be around this level in 25?
No, it has to grow because we were better off, I think, pre-COVID from margin point of view. So we have to catch up to that level very quickly. Things are now easing out. The commodity prices are softening, but in between this Red Sea or geopolitical issues are now under watch. So we will be waiting for another 1 quarter for.
All right. Hi, Mr. Dugal. Good morning and good to see you. An interesting point you made, right? Margins, I recall, between 2015 to 2020 were around 11%. And then they came down to mid-single digits and now they've rebounded. So, you know, in the near term, I think the goal was to get to around 10% margins. Does that happen in FY25? And post that, I think the longer term is to get to around 12%. So when does that happen?
So you're right. So our first milestone is to reach to 10%. And of course, next 2 to 3 years, we need to break that earlier height. So we are trying to make our aggressive plan for cost optimization during next 2 to 3 years.
All right. So that's one factor out of the way, moving to 12% in the next 2 to 3 years. Also, your mix, you know, I think 77%, 77% comes from PVs. And out of that, I think Maruti is one of your biggest customers out there. But you were looking at growing the non-PV part of the business as well. So could you tell us for the last year, what was the contribution coming in from PV? And how do you see this mix shaping up going ahead?
So PV growth in last 2-3 years is proportionately higher than all other segments. So truck segment, bus segments were almost muted during COVID and just after the COVID period. So truck market will grow in FY25-26. So PV still will be dominating in our total revenue pie. But again, going by next 2 to 3 year assumption, where our truck sales as well as railway sales will grow proportionately higher than the PV segment. So we are looking at around 80-20 ratio of our total revenue coming from past vehicle and to others.
Okay, so 80% from past vehicles and 20% from the others. Two more segments where you are, working on some business expansion. One of them is railways and the other one is refrigeration trucks. So can you tell us exactly what is the order visibility like in railways? How much could the incremental orders look like? And in refrigeration trucks as well, what is the incremental order visibility?
So in railways, we are going very aggressive now because we get into a coach aircon from the driver cabin. So railways are basically on tender business. So government is pushing very hard now for having a aircon cabin much more than earlier. So we got into two major tenders right now, and product servicing is now happening for that. There are large tenders in pipeline. It's very difficult to quantify as of now, but we are going very aggressive in railway as an overall segment expansion. Second point is on refrigeration truck. This is going slow as of now because still a lot of potential is there in this market. Product readiness is there, and we are trying with the large OEM to now go for a fleet level implementation. So still it will take 2 to 3 years time to grow in this market. That's how is the current status.
All right, we'll leave it there. Thank you very much, Mr. Dugal, for joining us. Good luck, and we'll touch base mid-quarter once again to take stock. So early double-digit revenue growth, margins, at least medium-term target. First target, not in 25, but first from 8.6 to about 10%. That's what they plan to do to get it. Well, let's talk about the market back to because that's the real big story, right? Big short covering yesterday. FII has bought some nearly 4,600 odd crores. Anuj is here with what he's making of things. Anuj, we were here talking about how the line of sight to a new all-time high is opened up. But well, you were pointing out that, it could be a strong day yesterday itself. It was a slow start, but then picked up and then really charged on from there.
Oh, absolutely, Prashant. Good morning. Markets rarely charitable. It was yesterday. We spoke about it, that it was very intriguing the way the GIFT Nifty was yesterday, and it should have been up at least 150 points. But I don't think traders complained because they got a good entry in the first 15 minutes, and after that the market didn't look back. My sense is from here on, the Bank Nifty, which has been underperforming, it's almost like a spring effect. You keep pressing it and finally it releases and it just surges, and that could happen. Also tells you the broad-based nature of the market's rally. The two big index, Nifty IT and Nifty Bank, not at new high, still Nifty at new high, the mid-caps at new high. So that's looking really strong. And the kind of buying that we have seen from FIIs, normally that goes into large-cap banks. So with Bank Nifty with about 1,200 points away from its all-time high, perhaps that could be the next to watch. Also because the Bank Nifty rally is because of a macro event, that big RBI dividend that we had yesterday. It normally doesn't end in one day. And when FIs buy, normally it's stocks like HDFC Bank, which lead it. And you saw first signs of buying yesterday in HDFC Bank. The only problem from the market point of view now is that we are now slowly pricing in a full majority for the BJP, and let's see if anything is left by the 4th of June, because it looks like the market's almost priced in the best case outcome. Now, looking at the setup yesterday, there was 7,200 crores of buying in index futures and 9,500 crores of buying in stock futures from FIIs. And within that, 1,320 crores in Nifty futures and almost 6,000 crores, 1,300 crores in Nifty Bank and almost 6,000 crores in Nifty. So that means in Nifty Bank, still there's some possibility of short covering. And just to give you those numbers, we started with the long short yesterday. Just look at that. I think on any given single day, this must be the highest short covering that we would have seen. In fact, if you look at the trend, we started with 2.5 lakh short positions on 17th of May, and we are now, the next page please, and we are now at just about 98,000, and my sense is by expiry, this 98,000 short might even become 98,000 longs. It happens like that once, shorts start to cover. The put-call ratio at 1.37 versus 1.20, so that's slightly overbought. In terms of stocks to watch, I'm watching out for a few stocks today. Indigo, stunning numbers, of course. Let's see how it reacts. And two stocks out of ban, Biocon and Idea. And in Idea, there's an upgrade as well. And of course, HDFC Bank. Because let's see if this FI buying is one-off or this is start of something big.
All right, Anuj, thanks very much for that. And that point is, sorry, Anuj, the quote of the day.
Yeah, the quote of the day. The quote of the day. Sorry. I'll just come to that. And this is from Estee Lauder, who, by the way, was the only woman on the Times list of 20 geniuses of 20th century. I never dreamed about success. I work for it. Sorry, Prashant, you were saying something.
No, a lovely quote, Anuj. No, I was just sorry. That point about going from extreme short to extreme on the other side.
Yeah.
It has happened, and we were talking about this in the morning.
Absolutely.
It's happened twice over last 2 times.
Oh, absolutely.
You bounce off a very short market. You go all the way to the other side, and then you start to wonder, well, where from there? So, and all of this is happening around election results, so it makes it all the more interesting.
And Prashant, one thing I'll tell you, late Abhay Aima used to make this point, I think in 2004 or 5, that we give perhaps too much importance to FIIs. Every time FIIs have been aggressively short, the market's made a bottom.
Yeah, no, absolutely. Anuj, thanks very much. Good to get that perspective. We'll take a quick commercial break here. We have Shrikant Chauhan joining in from Kotak Securities. We also have Vinay Rajani of HDFC Securities with some trading ideas. So stay tuned. Okay, welcome back. We're a few minutes away from the pre-open session. Shrikant and Vinay Rajani are with us with what they're making of things and the way to trade this now. Gentlemen, good morning. Good to have both of you here. Shrikant, your perspective on things. Do you think we've already started with yesterday a bit of an election move into the election? And what's your sense? What next?
Good morning, Prashant. Yeah, absolutely. I think the way the market has broken the level of 22,800, it is very clear that the markets are now heading higher towards 23,500 or 750 level based on its technical setup. In fact, market has spent almost 2 months between the range of 22,800 and 21,800. And crossing this level, it's a big event for the market. So earlier resistance 22,800 is now going to act as support for the market. The strategy should be to look for adding position. If we see the market is dropping today close to 22,900 levels, I'm of the view that now 22,900 and 800 going to act as very good support for the market. In fact, Bank Nifty was underperforming and it was not supporting to the broader trend of the market. But yesterday, complete move from the bank stocks as well as the way FIs have entered into the market. I think now Bank Nifty is also going to support the market for next few sessions. So broadly for Bank Nifty also we are expecting 50,000 sort of levels, and for Nifty 23,500 to 750 sort of levels.
Okay, Vinay Rajani is also with us. He is the Senior Technical and Derivative Analyst at HDFC Securities. Vinay, hi, good morning. This has been an uptrending market through and through, right? Do you expect that to continue? And what are your thoughts on individual stocks?
Yeah, good morning and thanks for having me on the show. So yesterday we have seen a clear-cut breakout from the 10 weeks consolidation. We were actually trading in 2,000 points range. Nifty were trading between 21,800 to 22,800. So that range has been taken out decisively with a momentum coming back, and zigzag kind of movement which was there previously in last 10 weeks, we have seen the breakout from that range. So as Shrikant said, that 22,800, which happens to be the previous resistance, now can act as a strong support for the market. So if we see some dip due to the global market weakness, we may find support around 22,800, and ultimately I'm expecting Nifty to do well and direction would be up only. So any dip should be bought into 23,400 to 23,500 is the next target for the Nifty. So it might happen that we will outperform from here. The global markets will consolidate or correct, but we will be in own orbit and we will find our own path. So yesterday we have come out from the long consolidation. I see Nifty coming to the level of 23,500 to 23,400 range in a short term, and 22,800 to 700 will act as a strong support. So as Shrikant has also discussed that IT and Bank Nifty, the sectors which were not performing previously, now started performing and giving support to the market. So overall it might happen that the large caps, due to short covering from the FIs, may see continuation of an uptrend, and that's why I'm expecting Nifty to do well in the coming session too.
Okay, all right. Good morning and good to see you in, gentlemen. Well, Vinay, you go first. Tell us about your individual stock picks.
Yeah, so basically yesterday we've seen breakouts in some large cap stocks. So first was the Ultratech Cement. So after a long time, we have seen some good breakouts in the cement stocks like yesterday, ACC, Ambuja, Ultratech. all large cap cement companies did very well. And there is a downward sloping channel, and that from that channel, Ultratech Cement has broken out. So I see a good opportunity. I think results were also convincing there. So Ultratech Cement can be traded long at 10,170 odd level. Stop loss can be kept at 9950 for 1 to 2 days, and upside targets can be at 10,450. So I see around 3 to 5% upside in the Ultratech Cement. That's my first idea. The second pick I would go long is the OMC HPCL. So OMC have not participated that in the PSU rally, and recently we have seen that Brent crude prices have also come down. It is near Brent crude prices are trading around 81. So overall, the logic says that looking at the chart also, it looks like that they should do well in the coming session. So HPCL looks best amongst the pack. So HPCL can be traded long with a at 535. Stop loss can be kept at 525. On the upside, I'm expecting a target of 550. So overall, HPC and Ultratech Cement can do well in a couple of sessions.
Okay, well, Shrikant, what about you? What would your stock ideas be for the day?
Good morning, Sonia. I think Tata Motors should do well, and it is consolidating within the range of 1,050 and 950, 940 on the downside. Since last 3 months, the stock is in the range. But while looking at the entire performance of the auto sector and the bullishness of the market, I am of the view that the stock is currently available at attractive levels, 950, 960. It's a buy at current levels with a target of 1,050 on the high side. The stop loss we can keep somewhere close to 950 level, 940 levels. Apart from that, we also like Adani Ports, and the reason is because the stock has completed its complex corrective pattern. It is into all-time highs, but based on its technical formation, I think it is heading for at least 1,500 to 1,550 in next few days or 1 or 2 days. So Adani Port is also a buy at current levels with a stop loss close to 1420.
Okay, thanks a lot for that, Shrikant. Well, let's go across to Sneha Seth now, the derivatives research analyst at Angel One, who's joining in for some FNOQ. Sneha, hi, good morning. What are the stocks to look at today?
Very good morning, Sonia. So with yesterday's strong day of trade, I think we have a buy calls. The two buy calls, the first one is Container Corp. This counter has moved up nearly 2% yesterday. We are seeing a support formation around 1,080 or so. So I would recommend buying this counter with a strict stop loss of 1,080, and the target expected will be around 1157. Apart from that, like private sector banks wasn't performing recently, and after quite some days of consolidation, IndusInd Bank has come up of the resistance zone place around 1430. So this counter again, it gave a very strong close. I believe we can go ahead and long this counter as well with a strict stop loss around 1407, and the target expected will be around 1510.
All right, Sneha, and so and broadly the frontline indices, Nifty, Bank Nifty, good for more?
Yes, of course. Like if you see yesterday's data, we have seen addition of long positions in Nifty. We have seen FIs buying an index future. The long short ratio has improved towards 42%. And if we see the writing happening in the monthly series, we are seeing 22,800 strike acting decent, adding decent positions. So I believe that is the support zone. On the higher side, 23,200, 250 is the levels to watch out.
Sneha, we'll leave it there. Thank you very much for that. Good speaking with you, and talk to you again soon. We'll take a break. We are back. The pre-open is 2 minutes out, and we have another company to speak with. Yatharth Hospitals. They're in hospitals in the northern part of the country, Noida, and in that area. We speak with them on their fourth quarter earnings and the outlook for FY25. Stay tuned.
Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. We are sitting with Siddharth Khemka to talk about some stocks in focus. Siddharth, this entire platform, new age tech companies have done very well this time, right? Whether not just Honasa, but there's Nykaa as well. Zomato did quite well. You had a couple of others, that, in fact, the entire consumption space. I mean, there was Jubilant Foodworks, Metro Brands and the likes too. From this entire basket, which are the stocks that you still like?
Yeah, Sonia, I think as you rightly said, there are two sets. A is the overall consumption, which is kind of inching up and improving, which is leading to a better numbers, be it for some of the retail companies, where even Avenue Supermarket has come out with good encouraging numbers. And after the last few quarters where they have been struggling with the large store formats, the same-store sales growth has inched up. The margins for these large format stores have also gone up. And overall consumer demand has been pretty strong. So that is one company that we believe, Avenue Supermarket, at current levels, we believe can give a significant upside, being a large cap and the kind of defensive name that it comes with. So we have a buy rating and a 5,300 rupees of a target price. The new age companies, Zomato is something that we have been consistently liking. The platform fees that they have introduced has been well accepted, and that has brought a lot of change and improvement in the overall profitability. And the surprise was the sharp improvement in performance of Blinkit. If you remember some time back, when the acquisition happened, the street was a bit negative on the acquisition of Blinkit because of the losses that it got. But it has the potential to bring in more profits than the core food delivery business. So the quick commerce is another thing that is helping Zomato. We again have a positive view and a target price of 220. So again, around a 10-15% upside potential in Zomato as well.
All right. Sid, you may want to listen into this company now. Actually, this is the first of the three hospitals that we're speaking with today. So Yatharth Hospitals is what we're talking about. We'll speak with Max Healthcare later, and then Fortis a little later in the program as well. So Yatharth, of course, is a hospital company based in North India. And they operate 5 hospitals in total. So they reported numbers for the fourth quarter, highest ever sort of numbers in Q4. We have, Yatharth Tyagi, whole-time director at the company, now joining in to take some questions. Mr. Tyagi, good morning. Good to have you with us here. Thanks very much for your time. Prashant this side. So numbers are super strong, right? Revenues are up 30%, EBITDA is up 35%, margins are up 100 basis points. This is, of course, for the full year. Your presentation notes the CAGR rate of growth from the time of inception. And especially over the last few years, you've maintained this 30% kind of growth rate. Could you put out numbers for FY25 if you do have a sort of guidance in mind for revenues and EBITDA?
Hi, good morning. Thanks. Yes, I think being a new listed company was the first full fiscal year performance that we presented yesterday on the results. So the way the growth has been there, both year on year as well as quarter on quarter, it primarily attributes to the increase in the occupancy as well as the change in the case mix. So I think in the years forward as well, we still feel there's a huge growth that is bound to happen in terms of our occupancy. This fiscal year we are close to 55% compared to 45% of last year. So we feel that this 55% can even grow much higher in the coming years, as well as increase in the RPOP, that is average revenue per occupied bed. This is what we feel. There's a huge scope for growth as well. That is due to the increase in the case mix. So now we are doing much more super specialty treatments, like our oncology share is increasing. We're getting much more international patients, including high-end liver transplant patients. So we feel based on the increase in the case mix, RPOP should also increase, and the growth should be quite sustainable for the years to ahead.
So 55% occupancy, where will this be according to you? I mean, you can see how this is moving by the end of FY25 or the middle of FY25. Where do you see this moving realistically? And on average revenue per bed, if you can give us a sense, it's I think about 29,000 rupees now.
See, if you look at it, the occupancy, and if you look at it, individual hospital level occupancy, and Noida Hospital, which is one of the more mature hospital, is almost running at 90%. And as well as a Great Noida Hospital, close to somewhere around 65%, and Noida Extension 55%. So we feel that, especially in the newer hospitals, that is Noida Extension, as well as Jhansi Orcha, this occupancy in Noida Extension, which is today close to 50%, this can easily go, 60, 65% in a year and a half. So that is for the newer hospitals. And of course, as the newer hospitals are growing at much faster occupancy rate, overall at the consolidated level, occupancy is bound to increase because of that. As far as RPOP is concerned, yes, we are doing roughly around 29,000 overall, but even in a single hospital like Noida Extension, the RPOP is close to 35,000. We feel that in this specific hospital, the RPOP, which is 35,000, can touch, levels of 40,000 rupees very soon, purely because of oncology treatment started here. So, last quarter we started radiation oncology as well as nuclear medicine. So PET, CT scans and Linac line have been started here. So oncology gives a huge boost to the RPOP. So node extension, specifically if I talk about, can easily touch above rupees 40,000 levels in the times ahead.
Okay, so the Noida Extension Hospital can touch 40,000 rupees. And what would this mean for the average RPOBs in FY25? I'm also asking because overall your international patients have also gone up, right? So how much can that revenue grow and how much would that lead to an increase in the RPOB in FY25?
We feel, if we talk about our RPOP, it is growing quarter on quarter, not just year on year. So the growth in the RPOP that, you have seen in terms of the delta for last 2 years, I think that growth in terms of percentage, it's very much sustainable at the overall level. So we expect the similar kind of growth that we have been showing for the last few years, even in the RPOP.
No, can you tell us how much is the revenue from your international patients right now and how much can it grow?
See, international patients is contributing to, single digit in terms of percentage when it comes to the overall. But if we talk about, a transplant program, so let's say kidney transplant, we have done around 150 kidney transplants in last 1.5 years. So here, across 90% of the kidney transplant are happening for international patients. Similarly, when it comes to bone marrow transplant and liver transplants. So basically, a transplant program is where we're getting a share of 80 to 90% of international patients. And as the volume of these transplants increase, the overall contribution in terms of international patients should touch double digit in terms of overall revenue contribution is concerned.
All right, we're here to talk about the financials, but best wishes with your entire team. Bone marrow transplants, kidney transplants, big surgeries, both of them. Give us a few more details though on that Ram Raja Hospital. There was a directive that came in there, and then you've got a stay. So what is the current status on this particular hospital in MP?
The current state of the hospital is running normally. Okay. Since the stay, we have been in talks with the local courts there, and everything is online. In fact, this hospital has grown significantly. If I talk about latest quarter 4, standalone, the occupancy at this hospital stood at 35%. And overall, in terms of the fiscal, this has grown 2x, 3x in terms of the top line is concerned. So Ram Raja Jhansi Orchha Hospital, I think the case on the stay is that we have received. I think we are pretty confident in the coming months. There should be a final order that would be, the case should be settled. But because we have had a communication with the local court and the officials there that the hospital is okay to run normally, we are expecting even further growth in terms of the overall occupancy in this hospital is concerned. And more super specialty treatments are now happening in this hospital. So the ICU care, that is the critical care beds, are almost full in this hospital. So that means that the patients for critical care treatments are now preferring a Ram Raja hospital, and we are pretty confident the occupancy should go up in the times ahead as well.
Yeah, what are the total beds now at capacity essentially, including the newly opened Faridabad one?
Yeah, so post the Faridabad acquisition, today we stand at 1,600 beds. And, the rough estimation is that in next 2.5 to 3 years, we should be doubling this bed capacity. So reaching somewhere around 3,000 beds. That is the plan. We are expanding our existing hospitals, both our Greater Noida and Noida Extension. We are adding 450 beds there. That is brownfield expansion, as well as there are a few more acquisitions that are in the pipeline, primarily in the North India region, focusing on Uttar Pradesh, Delhi NCR, MP. So bed capacity should be doubling in 2.5 to 3 years. That's our guidance for the bed capacity.
Okay. All right. We will leave it at that. Yatharth, thanks a lot for joining in and speaking to us on CNBC-TV18, and all the best for the new hospitals and the way forward for the business as well. But let's do one thing. It is 9:10, so let's get some stock action going. Honasa is the one that we're looking at this morning. Mangalam is here to tell us more about that. Mangalam.
Well, we spoke about the numbers, right? 3 times growth for the company as compared to competition. The underlying volume growth in the fourth quarter at 27%, and that's led to a 21% jump in their revenues. The operating leverage has played out. They've made an EBITDA of close to around 33 crores versus a loss of about 3 crores. And as a result of that, the bottom line also is a profit of 30 crores versus a loss of 16 crores. Margins for the company at 7%, showing signs of improvement. They've gained market share in key categories, 120 basis points in face wash, 40 basis points in the shampoo business. And they've also laid out 3 to 4 year targets for each of their brands. Remember, Dermaco had hit the annual run rate of close to 500 crores. Now their next target on this one is 1,000 crores, 500 crores for Aqualogica and Dr. Sheth's, and about 250 crores for B Blunt as well. And additionally, along with results, they've also announced the acquisition of R&D capabilities through Cosmogenesis Labs. Remember, this is a formulation expertise research and development lab company. The deal will close in about 4 to 6 weeks. They haven't announced the amount that they will be investing for this acquisition, but definitely improves their back-end R&D capabilities. The stock doing well now.
All right. Mangalam, thanks very much for that. That's Sonasa for you. And we'll see how the stock opens. Telecom is in focus once again, Voda Idea and others as well. But Reema is here with details. Reema, morning.
Thanks so much for that. So UBS today has upgraded Vodafone Idea with a target price of 18, and this is the highest target price on the street. In fact, in the last 2 weeks, ever since Vodafone Idea completed that fundraise, we have seen some upgrades. So Kotak had upgraded it, Nomura has upgraded it, but UBS's target price at 18 is the highest that we currently have. There are 2 key triggers for the company. One is a potential tariff hike. According to UBS, it should be 15 to 20% in the next 1 to 2 years. And secondly, relief from the government. The government is committed to having 3 private players, and relief for Vodafone Idea from the government could come in the form of AGR, the adjusted gross revenue dues that the company owes to the government. That could come down potentially. Now, UBS goes on to say that these are the 2 potential triggers. In fact, everyone on the street acknowledges that these are the 2 triggers, but UBS is making the argument that the valuations of Vodafone Idea are quite similar to that of its peers like a Bharti Airtel. But in case these triggers play out, then Vodafone Idea has the maximum leverage. It's the one who will benefit the most, the ARPU increase, the margin improvement, etc. Therefore, the risk reward for Vodafone Idea going into any such announcement is the highest. They see a potential upside of 70 to 80%, and therefore they're bullish on Vodafone Idea with an upgrade. On Bharti Airtel, it's a neutral call, and they have a neutral call on Indus Towers too. Back to you.
Okay, thanks a lot for that. Well, Interglobe Aviation, let's take a quick check on that one as well. 6th consecutive quarter of profitability is what Interglobe Aviation has seen. Very strong numbers. The stock is up about 3% in pre-opening. The Q4 revenues went up 26%. The EBITDA margin has improved. EBITDA margin has improved to 24.8 versus 20.9. It's a net profit of 6th consecutive quarter. They've reported 1,900 crores of profit this time. Very strong passenger growth of 14%. Load factors have improved as well, and the yields have gone up about 7% year on year. I also want to talk a little bit about what brokerages are saying, because it's a little bit of a mixed bag. While Morgan Stanley is saying they are overweight and they've increased the target price to 5,142, they say it was one of the cheapest travel-themed stocks currently, and any dip in the stock is an opportunity to buy. They also talk about that the company is guiding for a strong 10 to 12% year-on-year growth in the average seat kilometer. However, Elara Capital has changed their rating to a sell from a reduce, and they say that they are concerned about the fact that the stock has run up almost 40% in the past 3 months due to higher airfares. So a little bit of caution is in the system, but I'm going with green because numbers are very, very strong.
Have airfares come off, Sonia, a little bit?
I doubt it. I don't think so.
No?
I don't think so.
Depends on which sector you're going to.
I don't think so, because I'm trying to go to Masai Mara next month.
What do you mean trying to go?
It's a combination of a lot of factors, right? Get the visa, passport, hotel. But
that's the migration.
Before. Can't afford the migration. So going a little before, but get a sneak peek out there.
I think interesting times for the sector, right? Yeah. We're talking about for employees as well. It's a sector which is typically has got this heavy image, right? I mean, it's, the famous quote: how do you make $1 million? Basically, start with $1 billion, start an airline, and go to $1 million, right? I mean, that kind of tainted the entire image. But as Indigo and of course others are showing us. And I think Indian Airlines actually, more than anything else, some of these specific ones, that is not the case if, of course, you run the business efficiently.
As they say, one man's food is another man's poison, right? For Indigo, I think things really improved after Vistara's problems began a couple of months ago, where those pilot issues happened. They cut down capacity and all of that. Straight away, it was, there was no other option, right?
Absolutely.
Except Indigo, and that's when it really started picking up.
And I think the market share as well went from 57% to 61% odd. So, most of what they lost went to Indigo.
Correct.
All right. Well, I think we're just sort of hitting market open. So the first rate should be with us in a couple of seconds from now, right? 30 odd seconds. Lots to track. Earnings reactions will be in focus. There's, of course, Indigo, as we were talking about, but there is so much more. There is Zaggle, which reported numbers, a very healthy set. I mean, we just spoke with the hospital company, Yatharth, and a bunch of others, which we will get to as markets open. Yesterday, of course, has been a huge day with the Nifty Bank, and broader markets, not so much. I mean, they were a little laggy as compared to what frontline indices really did. So that's the bell, and you've got the first rates coming up on your screens. It's 22,928. It's flattish, 30-40 points lower right now. Sensex is down about 100 odd points. I mean, it's not a bad start, I would say. This gives you the opportunity to, if you think that, things are going to stay up, and generally overall the environment is going to stay positive. And of course, I mean, there's a big call on the elections as well. This gives you the opportunity at some point to get in. So 22,918 is where we're at, about 40-50 odd points lower. 40, 50, 60 point swings come so easily nowadays. I mean, just a couple of minutes and you're from down 50, you're up 50. So keep an eye as we go along. Mid-cap index is down about 0.14, and the small-cap index, I think, is also slightly lower to begin the day. Advance decline, though, is interesting. Almost full 2:1 in favor of advances. So that buoyancy, that vibrancy is very much there, and it's all about stocks. So Sonia has got that list. Sonia.
Well, thanks a lot for that. So let's kick it off with Interglobe Aviation, right? You have a very good set of numbers that has come in, 6th consecutive quarter of profitability. So Interglobe Aviation up 1.5%, picking up pace now. Morgan Stanley has a huge target price of 5,162 on the stock. Street definitely likes what they're seeing this morning. Apart from that, Honasa Consumer is really the stock of the moment. It's 5% higher as we speak. Strong growth, much higher than the industry. Underlying volume growth of 27%. Reported a profit this time around. The street likes that. In the heavyweights, I'm looking at HCL Tech because there's some news flow there. They've acquired HP's Communications Tech Group assets for $225 million. The street is not that impressed. Flat move on the stock right now. Sun Pharma is the other one. The shareholders have approved the merger of Taro Pharma and the company. So Sun Pharma just a tad bit in the green. UPL and Aarti Industries have formed a JV company to manufacture and market specialty chemicals. So UPL is up, Aarti Industries is also up in the green. JK Lakshmi Cement, EBITDA has gone up 46%. Margins have improved substantially. The street likes that, 4.5% higher on JK Lakshmi. Brigade Enterprises has signed, a joint development agreement to develop a project in Bengaluru. The size is about 720 crores. So Brigade is up about 2% Fortis Healthcare margins have improved. The hospital's business revenue is up in double digits. The street likes that, up about 1.5%. CESC Q4 numbers are largely in line with estimates, but the stock is down about 3% Shilpa Medicare is the other one. Good numbers actually from Shilpa Medicare. The stock is up 3.5%. It has been a erstwhile favorite of the market, and once again picking up pace now. Zaggle revenues are up about 46%. Adjusted EBITDA before the ESOPs are up about 9.5%. The street likes that, 5.5% higher there. Puravankara, the margins have come in much higher than what they saw last year. So keep an eye out on that. And Transformers and Rectifiers is the last stock I'm looking at. They've bagged an order worth almost 360 odd crores from the Adani Group and L&T. So Transformers and Rectifiers is up about 5%. But let's get back to looking at the market, which is not doing much right now, which is actually a good thing. The Nifty is hanging, tight around the 22,950 mark, just shy of 23,000. Big milestones being hit in the market lately. Sensex crossing 75,000, Nifty almost at 23,000. So not a bad opening at all. Flat at this point in time.
Thanks a lot for that, Sonia. Well, as you took us through that neat market start, we had the Nifty Bank that recovered 200 points from the day's low. So that's telling you the kind of mood that the markets are in. 48,645 is the low of the day. They have bounced exactly 200 points off that mark. A few stocks that are doing well from the broader markets, though. Johnson Control Hitachi, strong operational performance in Q4. That was driven by their cooling business. So out there, you had big revenue growth of more than 40%. The margins came in at around 10.5% odd. So, that stock should come off for you on the screen. Johnson Controls Hitachi, that's the one that's gaining. On the flip side, you have Orchid Pharma. The margins did compress by close to around, 500 basis points, coming at around 13%. So that stock, in fact, is down close to around 5%. Orchid Pharma should come up for you. Landmark, that's the other casualty this morning. It's down close to around 6%. The higher OPEX, that's what's hit their profitability. So that stock is down close to around 7% or thereabouts. And Godrej Properties has a newspaper article that's stating that the Defence Ministry has objected to one of their projects here in Mumbai. And they're looking at suspending work. So we'll have to get further clarity on that one. But for the time being, that stock's a little bit under the weather. A few gainers though. Bikaji is reacting positively to its numbers. So that stock's higher. While you have Bharat Dynamics as well. I think that one opened up well in the green. So quite a bit of action from the broader markets.
The top volume-led gainer right now is Idea. By the way, the Nifty is recovered, right? We were talking about that 55-point lower start perhaps could be used as a bit of an opportunity with a positive view on markets from a slightly, next 5, 7, 10 days kind of perspective. So there's a 50-point bounce nearly, which has already sort of taken place. Idea is the biggest volume-led gainer, 4% higher, so 14.5. I think UBS is now, in terms of their price target, the highest on the street at I think 18 rupees. Cochin Shipyard is coming with a 4% pop. 1972 is where Cochin is at. There is Zaggle, which I think we highlighted, 4%, 327. Phenolix Cables is up 9%. That is at about 1247. There is Aarti Industries, which is coming up with about a 3.6% pop. Stocks at 650 right now. Honasa, Mangalam was pointing that out, 5%, 5.5%, 440 on Honasa right now. And I think JK Lakshmi, we highlighted 6% higher right now. Stocks at about 839, 840. Brigade is up about 2%. There is PG Electroplast, which is up about 2.5%, 3% or so. Shakti Pumps, I mean, what a move on Shakti Pumps. It's a small company, but massive move. Last couple of days, it was a bit soft, but back up about 5% now on that one. Go Digit, which is the listing from yesterday, is down about 2% or so, 300 on Go Digit. I saw initiation on Go Digit from one of the brokers with a sell to begin coverage. Chola Finance is down 2%. Paytm is down about 3%, 347 on Paytm. And it's got large volumes for this point in the day. And there is CESC, Inox, Wind, and Viatech, Vabag, etc. Viatech is down about 2%, 950 or so is where that is at. Landmark Cars is down 5% as well, 725 on that one. The market overall on the Nifty, absolutely flat. Najib.
Just one more stock, Indian Metals and Ferroy. That's one of the stocks that we highlighted earlier this morning. Yesterday, the stock was down close to around 4% odd. They've come out with some clarification post-market hours. And also, there was big delivery-based buying. Tell you, one of those sellers are out of the way. So, explains why that stock has bounced back close to around 3%. We highlighted this earlier.
All right. So, that's Indian Metals up about 3% or so to begin the day. Vineet Sambre is with us, Head of Equities at DSP Mutual Fund. Vineet, good morning. Good to have you with us here. Thanks very much for your time. The banks yesterday participated. It's the large FII-owned sector, etc., etc. And FIs have been big sellers through the course of this year so far. That underperformance, and it's also, by the way, still it ranks, in the pole position whenever we ask which is the sector which is poised to do well, largely because of valuations, etc. Do you think its time is starting to come into the horizon? It's already started. What's your view broadly, Vineet?
So I think I would agree, and I have been even stating this on your channel many times in the past, that overall I think we have been quite constructive on the banking sector. In fact, we've also had our own thematic fund, which is a banking sector fund, which we've launched a few months back. And this is all to do with the key metrics, which is, we have decent growth. The sector actually is showing. The most important factor, which is the quality of assets. I think on that parameter, the bank, including the private sector and the PSU banks, they are at a multi-year best when it comes to the asset quality. And I think that is one of the most important parameters to sort of focus on. I think beyond that, as we look through the next few years, anyways, the markets are seeming to showcase the recovery which the economy is poised to actually have. And, if one would like to really play that momentum, banking sector remains a proxy to that. And hence, we believe that banking sector overall looks good. A small bit of a technical factor when we compare the banking sector performance to the, let's say, the bank index to the Nifty index, it has actually moved in a specific range. At the current level, it is at the low point of the range. So which makes it even more, relatively better from the perspective of a relative outperformance, which it could showcase from here on.
By the way, there's plenty of stocks that are moving around. Vodafone Idea has some upgrades going for itself. Many upgrades actually. UBS has upgraded Vodafone Idea to a buy. So that stock is up almost 4.5% as we speak, picking up pace now. The other one I'm looking at is Finolex Cables. It's a 12.5% rally on that stock. We've spoken about that, but numbers are not bad at all. Double-digit revenue growth, 14% revenue growth. EBITDA is up by 16%. Margins have improved. So Finolex Cable is really taking it away at this point in time. Vineet, hi, good morning, and thanks for joining in. We were talking about how some of these pockets are really looking good this time. If you talk about the new age tech companies, the platform companies, right? Whether it's Zomato, Nykaa, Honasa Consumer as well, all doing pretty well. Is this a space that investors should look into now for the longer term?
Yeah, so clearly, I think Sonia, some of these companies have seen turnaround in terms of the performance, profitability, but a lot of that has really got captured in the valuations, is what I feel. Maybe these are now, let's say, good businesses to keep under your radar. But from the valuations perspective, we would be happier to own them at even more comfortable valuations, but not at the level today, because I think a lot of these good news or turnaround in the performance has got fairly captured in the valuation, is what I feel.
Okay, all right. Hi, Vineet. Good morning and good to see you. And I'm getting worried as a consumer because airfares are going up. Interglobe Aviation is doing well. I think the last time we chatted, we spoke about telecom rates as well going up because that's likely to happen post the elections. And since, Sonia briefly mentioned about Vodafone Idea, let's talk about the telecom pack. How do you approach this space? Some of the biggest returns actually have come from there. Whether it's Vodafone, whether it's Bharti Airtel. I think Bharti Airtel is close to have doubled in the last 18 months or so.
You should also be happy as an investor because top price is also going up. But anyways, as far as the telecom...
If you're an investor, Vineet, for us, as of now, we are customers and hopefully some of my mutual funds have that.
Sure, I'm assuming you are invested in my fund. But anyways, separate of that. So I think as far as the telecom business is concerned, definitely, or any, you take any business actually, whenever we see the ROEs inflecting from maybe at a level which are lower than your cost of capital to going beyond the cost of capital and the cash flows are improving, businesses come out of heavy capex mode. I think those are the periods where those segments see inflection in terms of the valuation and re-rating, which is what we saw in case of telecom businesses. When we hear the large companies talking about the moderating capex plans in the future, a good amount of cash flow generation in the future, the ROE is inflecting, and the possibility of the ARPUs also going up in the near future. I think those are the key metrics which would determine the re-rating factor for these companies. And also, as a matter of cautioning again, the ARPU increases have been pretty slow in the past. While there is a lot of built-up and hope that these increases will take place, it is very pertinent that for the rally to sustain, the ARPU increases need to take place on a timely manner. If it doesn't, then I believe that this could fizzle out in future as well.
Okay. By the way, record highs for the sensex, 75,500 milestones getting hit day after day, and lots of positives, right, for the market as we've been counting them, whether it's political stability, policy stability is what the street is now penciling in. You have global cues which are positive as well, stable over there. A lot of the geopolitical issues are out of the way, so markets hitting record highs. But Vineet, which are the pockets from the earnings that you've liked this time around? If you had to, if I gave you a blank check and said for the next 12 to 18 months, which are the spaces that you would put money into now from a long-term retail investor standpoint?
So I think clearly there is a divide in the market. Overall, the market may look, let's say, reasonable in terms of valuations, slightly higher than the average. But the divide is very large. You have one category of the segment which is very expensive, and then there is category like banking, insurance, and all, which is not as expensive. So I think a good portfolio would actually try to create a balance between the two, because on one side you also have growth backing up. But specific to your point, Sonia, I think if one has to look at segments which we like as of now, I think again it is a combination of some segments which are in momentum. So I believe that the segments which are related to the real estate sector should see some benefit of the growth which is happening in the real estate sector. So that is one which I would like to sort of focus on. Auto anchors are specifically doing reasonably well, is what we have seen. And this has been the category which we have been positive for a while. We believe the continuity of that growth taking place, and the companies which are, as I keep saying, focusing on technology neutral areas, focusing on diverse geographies. I think those are the companies within the auto anchors which should do well. The third space is, I think, the segments which today are not doing well but could cyclically turn around over the next 2 or 3 quarters. Within that, I would believe that a large part of the consumer discretionary today are still not showing any signs of recovery. We are seeing the results, but I believe the bottom is getting sort of created there, and the base is becoming favorable for them over the next 2 or 3 quarters maybe. Specialty chemical is a segment which has bottomed out to my judgment. And I think that's one category which one can sort of focus on. So I think these would be the areas which I would like to focus on as of now, Sonia.
Okay, you mentioned specialty chemicals. Vineet, what about metals? I don't think there's been so much of buzz in metals for a long time. And we have heard this in the past. This is that super cycle. This is a mind-blowing cycle. A lot of people are getting in. But are they getting in a little bit too late? Or do you think it still has some runway?
So, unfortunately, I've always got my metal call wrong. This time around, only difference what I see with the companies, first of all, it is very difficult to predict these cycles because these are linked to the, global matrix, and things are very volatile globally is what we all know. So I think taking a very definitive and a strong call on these segments hence becomes very difficult. But right now, I think things have become slightly relatively better because the balance sheets of most of the metal companies have improved significantly. My metal analyst tells me that over the last 20 years, he has not seen these balance sheets become so good and strong. So I think from that perspective, it would be good to capture these businesses at a low cycle.
Okay, all right. Vinny, just hold on to that thought. The breaking news that's coming in now is that the Nifty is at around 23,000 odd. Hormuz has sent us some data points out here. It took us around 64 sessions to move from around 22,000 to 23,000 odd. And this is a big, big move that we're seeing. Talk about hitting 22,000 on February 19, 2024. From there, a big move. Stocks that have been leading this last 1,000-point rally. You have Hindalco from the metal pack, Mahindra & Mahindra, Eicher Motors. These stocks are up between 25 to around 40% just in the span of around these 64 sessions. And big moves being seen on Bharti Airtel, Tata Steel. Well, some underperformers though. The tech pack hasn't participated. So there's been one segment of the market that's not really participated. That's HCL Tech, Infosys, Wipro. But 23,000, and guys, I love it, to be on television when we hit a new milestone.
I was just thinking, Nigel, when I joined in 2008, right, the sensex was at 8,000. It had fallen that day, I think Lehman collapse, and now almost at 80,000. So it's like this 10x jump that we've seen in the market, right, over the last...
Guess what the Nifty was when I started television?
I don't know.
I was just checking.
2,000?
No, at 1350.
Wow.
guys are too old.
Yeah, too old. Yeah, we're too old for all this. Yeah.
But I've seen all the milestones.
But it just puts it into perspective, right? That we talk about the here and the now, today, tomorrow, volatility, this, that. But at the end of the day, the kind of compounding that this market has done over the last 10, 15 years. And, I was just looking at it, you barely get 2 or 3 instances where the market really rallies in a short span of time. And we've caught that maybe once in 2008, once in, I think, the best one was in 2020. So, yeah, you just have to sit through the ride.
And the equity cult here in India is getting developed. It's shaping up very, very well as well. And, investors are showing maturity, which will be good news. The next generation as well will be more involved, and we'll see a greater participation that's coming in there. So believe in this market. If you're investing for a longer span of time, you'll get good spurts and you'll get some pullbacks as well. Keep allocating. The music is playing. You have to dance a little bit.
I agree with everything you guys said. But I'll also add a word of caution for a lot of new people, which is that don't go berserk with keep an eye on valuations, keep an eye on what you pay, because at the end of the day, the point that you buy, if you pay excessive amounts, then over a period of time, and it's happened in the past. Mean reversion, we've not had a powerful valuation-wise mean reversion for a long time now. So, but that always plays out. don't pay 100 times earnings, because then you're kind of limiting what you can do over the next many years. And, so keep that in mind as you look at these milestones, and absolutely participate, make money, but also be prudent with what you pay out there.
I have to share one incident with you folks. So I was recently doing the podcast with Deepak Shenoy, and he was telling me that every time, he has a sort of alarm bell, right? Every time his local panwala comes to him and asks him what stocks to buy, that's when he decides that, okay, now we've peaked, because it happened to him in 2007, it happened to him in 2019. He's like, this time it's not happened yet. So which means that the market is still not in a euphoric stage yet. But I guess caution is always taken.
What I would like to see is that the Panwala starts as SIPs. That's when you believe that the investor is actually maturing. Your house help, your chauffeurs, when they start participating, and mine do. So, they put a small amount of money out there. So I believe that's why I say that this market is maturing, and over a longer span of time, our kids, their kids, everyone will reap the benefits.
From it. Yeah, of course.
All right. Well, so that's a new high which we're talking about, and I think. What do you think, guys? Bank Nifty at 50,000 will be more punchy?
That's in the next week.
50,000 rolls off easier, right?
We're not too far away from that.
Next week, 50,000.
We're there. I think we almost made 50,000 on the Nifty Bank, and then, of course, we didn't quite hit that number, but for all practical purposes, we were there.
Prashant, another thing, right? All the guests who we speak to tell us that they are not too worried about the election outcome. They want the election to move out of the way, and then the policy continuity is something that they're looking at for the market. So, for all of you who are still worried about what happens during election, what happens post-election, I don't think that really matters in the longer scheme of things. If this policy continuity is something that the government is looking at, if there's no negative surprises in the July budget, it's just par for the course, the uptrend, I guess.
Absolutely. We'll sort of come back to the market with more as we go along, but let's talk about some homegrown businesses now, right? That's where bulk of the wealth creation has really been made. And I'm talking about Mankind Pharma. It's been a year since Mankind made its debut on stock exchanges. Stocks up basically almost doubled, 90% if you want to be precise, since listing. Phenomenal sort of run the company is having, both business-wise and market-wise as well. So what's the way forward, and what is the company's revenue target now that it has crossed the 10,000 crore mark in FY24? My colleague Ekta caught up with the company's Vice Chairman and Managing Director, Rajiv Juneja, for this and more. Listen to that conversation.
Mankind has always talked about this, that we always would be working towards making sure that company is having bigger market share and bigger share in chronic side. We'll always try to go for consumer side. We'll always have talked about that anything which is there for entry barrier, we'll go for it. In the past, we have seen many things and we have rejected many things. We have seen big and small in last couple of years. Look at the history of Mankind. 2 products from Doctors Reddy. One is Daffy, and the second basically is Combi Hill. One is Panacea. Again, when we took Panacea, we saw that it should have entry barrier products, it should have patent product, it should have chronic side. We have done that. So as far as the financial discipline is concerned, or certain things are there where our conservative kind of a nature come forward, we're always there, because you cannot change your nature. So it's just making ready yourself. Once you become an IPO company, you learn a lot of things from other companies as well. Our peers do the same thing. If in the past we had this 10,500 crore rupees kind of instrument, now we have added 12,500, because you're always in the market, and it is not that every day you get some opportunity. Once in a while you get an opportunity. It's making yourself just ready, nothing in haste, nothing aggressive, nothing which will ensure that our EBITDA goes down. We'll always think anything which can add value to Mankind. It should be most important, EBITDA accretive. The company's EBITDA, whichever company, should be bigger than ours EBITDA.
All right.
But these are certain precautions you make. These are certain things you learn from the market and you go ahead with those.
All right, fair enough. So it's an enabling resolution. But could you clarify for us on whether the company is exploring Advent's stake in BSV?
I cannot talk about this because a lot of speculation is there. You understand how these things really happen in the market. Number of reports starts coming without any kind of a solid reasons and things are there. I cannot accept or deny. These are all speculative. Once something solid will happen, let's talk about that. But again, I want to reiterate, will always be thinking from the point of view of mankind. Will it be EBITDA accretive? Will it be adding some entry barrier products? Will it add some kind of a consumer side products? Anything. I'm not talking about, because in the past, many things came to us. Many things are still there in the market. But we have never been speculative. We have never been, over aggressive. We've always been conservative because you cannot change your basic nature. You have some basic nature. You cannot change that.
All right. But the valuation, let me put it the other way, while you haven't accepted and denied whether or not you are interested in Advent's stake in BSV, the valuation is pegged at $2 billion for 100% stake. Would that size of an acquisition be something that Mankind is looking at?
Absolutely not. It is too much. If somebody says 3 billion or 2 billions, 2 billions have how many zeros, we know it very well. How we build this Mankind, we know it very well. So we have a kind of a philosophy. We are organically build up company. We'll never go very speculative. Any speculation is not right for us. At any given time, we know our strengths, we know our weaknesses, we know what we can do.
Sure.
So, whatever something comes in a newspaper is just a speculation.
All right. Well, the other report which actually was circulating is Healthium Medtech. That is, in fact, a surgical suture staples company. So it's away from what Mankind traditionally does. That valuation was around $1 billion. Would you like to clarify whether you were in the market for that?
Yes, I can say that we were there, but we did not go for that. Again, look at that. So once we find that the valuation was too high, we say, no, we'll not go for that. It was not for our thing.
Okay. All right. But would you look to diversify into a completely different segment, such as medical devices?
No, madam. Anything which basically has some kind of entry barrier, something, just remember 3 things, rather 4 things. Yeah, you'll meet me after 5 years. We're just doing the same things. Entry barrier is 1, chronic side is 1, consumer side is 3rd, and 4th basically is EBITDA accretive. If no, no. We are very firm on these 4 things. We remember it always. Anytime we are looking at any entity, our thought is only 1. It should have these 4 things. If no, we say no.
Fair enough. You have over 3,200 crores of cash on books right now. What is the utilization plan then?
Once we have the money, it is not for the dividend. It is there to really, put the money at the right place. So we always think, how can we just add some kind of a value to Mankind and Mankind shareholders? How can we deploy that funds? So that's one reason. And when you go for shopping, it's not a shopping mall. You go and you see everything is there, and you can once in a while something comes. Once in a while, so we look around. But it does not mean we are in a hurry to spend our money. It is hard-earned money. You just keep it as it is.
Okay.
If something nice would come, again, 4 things I take it again: EBITDA accretive, entry barrier, chronic side, consumer side. All right. Otherwise, no.
All right. Okay. All right. That point is taken. In the past 1 year, and I think it was just a couple of months ago that we had the promoters sell around 1.6% stake in the company for around 1330 crores. What was the reason, and any kind of further pare down from the promoters?
See, the point basically is what we are very aggressive company. Once we decide something, speed is everything for Mankind. We were supposed to come below 75%. And that's one reason we came to below 75%. Why to wait? Go for it. Do it.
So any further selling expected?
No, madam.
Okay.
No,
All right.
no.
Okay, let's do one thing. Let's take a quick commercial break. On the other side, Abhay Soy of Max Healthcare will be joining in to talk about their Q4 earnings. Stay with us.
Welcome back. Well, let's focus on another management as promised. Max Healthcare now, their quarter four revenues, well, it's up in double digits. The margins are maintained sequentially, but profitability a little lower on a year-to-year basis, though the numbers on the whole were very, very good. Mr. Abhay Soy, the CMD of the company, joins us on the show. Hi, Abhay. Good to see you in, and thanks a lot for joining in. Well, a solid set of numbers. Let's get through the basics first. If you could tell us, what's the RPOB guidance from here on? Last recorded numbers around 78,000 odd. And also occupancy. The fear, Abhay, is that, you're peaking out in terms of margins. Do you agree, or do you believe that you can sustain it at current levels?
Absolutely. I think we can keep sustaining it. And we are not so preoccupied with margins, so to say. We are more preoccupied with EBITDA per bed. The higher end business, the better payer mix, the better clinical mix, although it gives you higher margins in absolute terms, in percentage terms, it has lower margins. So, in due course, if the margins in percentage terms go down, but in absolute terms go up, we are more than happy about it. Eventually we have beds and we have number of days in a year. So EBITDA per bed is the most sort of important indicator. And you've seen that being sort of ramping up. Again, just coming to your first point about the net profit, although it was marginally lower, it was largely on account of fair market valuation of the contingent liabilities, which you have to do a fair market valuation, and there was a change in that pricing. So it's a non-cash item. Besides that, so that was the largest impact of about 31 crores onto net profit. Other than that, there's about a 25 crore impact due to tax, which is the effective rate of tax, which has gone up. And due to the two new hospitals that we bought, although they were 8 crores EBITDA positive, they were 11 crore net PAT negative, because we have transaction expenses also. Otherwise, like for like, even the net profit has increased in excess of 20%.
Okay, can you give us the exact level of the RPOB? I mean, the concern has been that overall occupancies, RPOB levels have hit a peak, not just for you, but for the industry as a whole. So for you, what are you looking at as an average RPOB for FY25?
We've been answering this question sequentially every quarter for the past 15 quarters. And you will see again in the next quarter that the RPOB should go up in my mind, and sequentially as well. There continues to be a lot of leg room in terms of RPOB. It's not due to pricing. Pricing impact is only 2.25%. But we keep moving up the clinical mix as well as the payer mix. Do keep in mind we have a capacity constraint, so you'll see a lesser ramp up as far as the occupancies are concerned. But because we have a lesser sort of opportunity in occupancy, you'll see more of a ramp up in RPOB, simply because we have to distill the payer mix and we have to distill the clinical mix. Once we have the new capacity, we'll probably see increase in RPOB tempering, but you'll see a ramp up in occupancy.
Got that. So RPOB's at 78,100, right? And you're saying that it should improve going forward as
That's
well.
right.
Roughly, broadly. That's
right.
Got it.
That's right.
Could you give us some details on the sort of ramp-up timelines of the new units in sort of Lucknow, Nagpur, also what's happening in Dwarka as far as expansion is concerned?
So Nagpur we acquired on 9th of February last year, and Lucknow on the 7th of March. So, I mean, these are both profitable hospitals, and we intend to add on to this profitability. Of course, the first year, which is the current year, we will be putting all the building blocks and all the sort of doing whatever restructurings that we do. But having said that, it will still be accretive, and we will continue. I mean, of course, next year should be explosive as far as that is concerned, because this year is where we are going to be seeding all the value propositions within these two facilities. With respect to Dwarka, we will be starting commissioning the hospital shortly, early part of June, which is in the next couple of weeks, in fact. And we are looking forward to a strong ramp up. We are seeing very strong traction, both with doctors and inquiries in this hospital. So we believe the ramp up should be pretty good as well. But I think perhaps next year will be, although this year may be incremental, because at least initially, the operating losses of Dwarka will be absorbed by the present cash flows of both Lucknow and Nagpur. In fact, absorbed and more, because the cash flows from those are significantly higher. But next year will be explosive year.
Are you saying that the Dwarka hospital to be up and running sometime in the next month, 2 months or so, right? That's
next few weeks, early part of June.
Early part of June.
That's
so
right.
It's imminent in that sense. And you said for Nagpur and Lucknow, FY26 will be, you said, explosive. I mean, in terms of growth and everything in there, so it'll start contributing in a big way.
Yes, I mean, they had about 60-70 crores of EBITDA last year. This year, we will be adding on that. But, next year it should be more of a hockey stick, right? I mean, because we're going to be putting all the foundations in place, making all the changes, all the plans, and so on and so forth. So, we are going to be getting our act together, renovating, upgrading the infrastructure, and so on.
So what could FY26 numbers look like? I mean, a ballpark? If it were to be...
But I can't give you...
Yeah.
I'm going to avoid, I've always avoided giving forward-looking guidances. I'm going to continue doing that. But that should provide exponential growth from these facilities rather than incremental.
And these are how many beds? How many beds in total?
So these are between the two, they're 500 beds right at present. We are adding by the third quarter of the current year, we should be adding another 150 to 200 beds. Over the next 12 months, we should be adding another 300 beds.
Okay, all right. Abhay, also your international revenues, I think it's holding at around 150 crores, which is a jump on a year-on-year basis. So on a sequential basis, it's a little flattish. I understand there were visa-related problems, which is hampering this business a little bit. But for the coming year, hopefully things get resolved. How do you see this business shaping up? And also, what could the potential contribution be to your total mix?
I mean, the present contribution is 9% of our revenues. You should look at this business on a quarter-on-quarter basis. More importantly, festival-to-festival basis. Certain festivals impact us more. So you should not seek to sort of rationalize it on a sequential quarter basis. I mean, just to give you an example, there was Eid in the Q4. So that impacts, people coming from Islamic countries to us. People travel less at that point of time. So, I mean, I won't read too much into the sequential growth. I think we've had the visas issues impacted us on a year-on-year basis, not so much on a quarter-on-quarter basis. I think on a year-to-year basis, not significantly. Normally, our growth has been about 23-24%. This quarter was 14%. But again, there was nothing secular which sort of sets it back, and I think we should be back to our original growth soon.
On an average, your margins have been sustained at this 28% mark, which is not bad given the kind of competition, capex and all of that, right? Do you think you can hold on to these margin levels?
I mean, capex doesn't really have anything to do with margins, because that's more of a balance sheet item that, But having said that, like I clarified, our intention is always to do higher end work. So, I mean, if you do... just to give you an example, on an international patient, in percentage terms, your margins are lower, but in absolute terms, they're more. A clinical program in a liver transplant, your margins are significantly higher in value terms, but in percentage terms, they're lower than a dengue patient. And that's what you would seek to do. A higher-end clinical program or a better payer mix, through which eventually your margins can temper or can come down. So long as the EBITDA per bed keeps increasing. So again, I would like to direct you to that. Yes, 28% is something to be sort of happy with and this thing, but I'm not really preoccupied with that because I could have maintain the same margins, yet my EBITDA can stagnate, whilst my percentage margins can come down significantly, but my EBITDA can grow on an overall basis, and that is what I would be looking at.
So this EBITDA per bed is about what, 78 lakhs?
That's right, and that was an increase of I think 12 or 13%.
Yeah, and that's a increase already in FY24. So as you say, this is what you focused on. What should be, again, I mean, what could you look at going forward? What can we look at for FY25 beyond? I mean, throwing in all these acquisitions as well, which will become fruitful and start contributing.
Yes, I'm just going to avoid, again, giving forward-looking guidances because we've not done that in the past either. But we've had, again, for the last 15 quarters, we've had both, I think, sequential growth every quarter as well as annualized growth. And we continue to believe that will continue to happen on a EBITDA per bed. And it's a fairly robust double-digit growth that we've been enjoying. And, the future should be similar.
Okay, all right. Abhay, final question before we let you go. You'll have big expansion plans coming up. I think 3,000 beds in total over the next 2.5 years or so. So what's your bed capacity and where is it headed?
Yes, so we were 3,500 beds. We've just added another 500 through acquisitions, and that makes us 4,000 beds. We had a brownfield capacity expansion of 2,700 beds, but now it's going to be 3,200 or 3,300 beds. Because there's further brownfield expansion opportunities, the two acquisitions that we've done. So that takes us to about 7,200, 7,300 beds in the next 2 to 3 years.
Okay, all right. Abhay, we'll let you go on that note. Thanks a lot for joining in and speaking to us on CNBC-TV18. Well, let's do one thing. Let's talk about Zaggle Prepaid. It's buzzing on the back of a very strong Q4 performance. Their profits and revenues saw a stellar jump, but the margins contracted sequentially. Avinash Godkhindi, who is the co-promoter, managing director and CEO at Zaggle Prepaid Ocean Services, joins us now to talk about that. Avinash, thanks a lot for joining in. Can you tell us what is the kind of growth you're looking at? Q4, the growth was quite healthy, but what is the total order book at? What is the kind of growth that you can eke out in FY25?
Thank you. Thank you so much for having me here, Sonia. We're very happy and thrilled to, have had our best ever quarter and year basis, EBITDA, PAT, revenue, every multiple that you can, look at. And, our growth projection, we have upped our growth projection for this year from earlier guidance was 40% plus. Now we are able to give you a guidance of 45 to 55%, and we are going to double in 2 years in terms of size.
So this is the revenue growth that you're talking about, where you've upped your guidance to yes. 45 to 50% for FY25.
45 to 55%, Sonia.
45 to 55%. What's the total order book at currently, and what kind of growth are you looking at there?
Sonia, we are a SaaS fintech. We're not an IT services company. So the order book model doesn't necessarily apply to us. Having said that, momentum is extremely strong, both on the corporate addition side, cross-sell is kicking in, and as well bank partners. We signed up some great banks last quarter. We had Axis Bank. We got empaneled with the Punjab National Bank, Indian Bank, Canara Bank. So our momentum on the bank partnership side has also been very, very heartening.
Avinash, so hi, morning, Prashant here. So revenues were about 776 crores in FY24.
Yes.
So just to put a number to it, and that was 40% growth in 24. What are you expecting in 25?
So about 45 to 55%, Prashant. So all of us can do the math. That's where it sits, and we are fairly bullish about the coming year.
All right. Now, to clear the margin point as well, which was slightly above 9% in 24. Again, here, what should we expect?
So our adjusted EBITDA margins for the last
year... The reported number is about 9.1, right?
So we gave a guidance on the adjusted EBITDA margins, Prashant. We had given a guidance of about 11 to 13%, and very happy to share that we have, upheld the guidance, and we were about 11% for the last financial year.
So this should be so for 25, Avinash, what would this number be?
So there, Prashant, we would want to, while we believe we'll be similar to current levels, we want to be a little conservative, and we see margin expansion, etc., kicking in, in the coming years, maybe 2 to 3 years and beyond, because we see tremendous opportunity to capture market share. See, these kind of opportunities do not come every day, and some of it is on the back of regulatory actions that happened recently. And as a stable, profitable, scaled-up fintech, we can see, very conservative banks also gravitating towards us. A lot of corporate customers who've been very cautious historically have started to sign up with us and work with us. So we are focused on capturing market share and growing the business. And, this business has operating leverage inherently in it because it's a SaaS fintech business. And we are sure in the coming years it's going to kick in.
So I want to talk a little bit about your business spend management platform, Zoyer. Can you tell us what is the kind of potential you see there in this whole MSME space? What kind of growth are you looking at?
Sonia, see, last year we started clocking revenues in Zoyer, and it's already 30% of our overall revenues. Right? So it's seen tremendous traction bundled with our business credit cards. And we see tremendous potential there because every company has vendors. Every company has payments that they need to make. And these are much more significant than the spends that companies make around their employees. Every company obviously has employees too, but employee spends are relatively small typically. And I'm talking of the overall economy. There are certain sectors like IT, etc., where employee spends may be larger, but overall, if you look at the economy, the vendor payouts are much larger. And here we are giving you a full suite. We are covering employees through Save. We are covering vendors through Zoyer. And we're covering channel partners through Propel. So the whole 9 yards is covered from a corporate perspective. And we are seeing great cross-sell for Zoyer as well. One of the things that we always felt we could do better, and we have started to do it last year, and we want to continue that momentum, is to be able to cross-sell Zoyer to our existing Propel and Save base. And that's coming across great. We've not yet dabbled too much in the MSME space, which we hope to tap into through partner banks. Banks whom we've signed up, banks like ICICI, Kotak, SBI, Access, Yes Bank, IndusInd Bank, and we want to tap into those pools through these the reach of these banks.
So you said that 30% of your revenues comes from Zoyer currently. How much can that grow to, since you're doing a lot of cross-selling as well now, how much can that contribution grow to over the next, say, 1 to 2 years? And in absolute terms, what kind of revenues are you looking at from Zoyer?
So, Sonia, let me put it this way, right? Beginning of last financial year, the contribution from Zoyer was 0. In just 1 year, it's ramped up to 30%, right? The platform has really been embraced by the market. People are liking to use it, and bundled with our cards, it sort of augments beautifully. So rather than putting in an absolute number, we see the opportunity very large here, and this can scale up in a very significant way in the coming years.
Avinash, just to take the sort of net earnings, so you did about 3.5 rupees in earnings in FY24. Right? Say by FY26, what could this number look like? I mean, just give us a sense at a PAT level.
See, as I told you, our guidance on growth is very strong for the next 2 years. We're going to double in size, right? And that's a fairly clear statement to make. I wouldn't go beyond that in terms of guidance as to how, by FY26 our PAT, etc. would look. But we are very confident about how things are looking.
So this is all organic, Avinash? The numbers that you're talking about?
Okay. Yes, this is all organic, Prashant, and we are looking at inorganic opportunities very seriously. And there's some very interesting opportunities that are opening up, and I can't talk about them because they're still in the works. But anything that comes inorganically is just going to be adding on top of this. That's going to be the cherry on the cake.
So that's plus. All right, lots happening, and it's a very interesting business with a lot of moving parts and strong network effect as well, as I think we've spoken in the past as well. Thanks very much, Avinash, for joining us. Great speaking with you, and appreciate your time here on CNBC-TV18. Good luck. So that's Zaggle Prepaid, which is up about 4% in a market which is down about, 40 points or so. So not very much going on at an index level. I just want to quickly make a mention of the broader market breadth. So, yesterday it was all large caps. I mean, not all, but large caps did much better than broader markets. Today as well, I mean, if you take a look at it, this market breadth is slightly negative now. Started strong, right at the word go, but 1,200 stocks are lower and about 1,100 stocks are higher at this stage. Paytm is down about 4.5%, 340. That's the biggest volume-led loser right now. There is Chola Finance, which is down 2.5%. Yesterday's listing. Go Digit is down a little bit, 1.33%. And there is a fair bit more, which is adding on the downside. I think we'll take a quick commercial break here. We'll come back with more on the other side. We'll get you some technical trading ideas as well. We'll sort of turn our eye and attention on, of course, what's happening in commodities. All of that in just a bit.
Welcome back. Well, let's do one thing. Let's just take a quick look at the market. Now, slightly under pressure. Nothing alarming, really. The Nifty is down about 40-odd points. Sensex is down 100 points. Mangalam is joining in to tell us about BKG and why you should be watching that one. Mangalam, over to you.
Looks like a lot of bhujia was consumed during the fourth quarter. That's exactly why I'm watching out for BKG. You know, good numbers coming in. Even if you look at the reported numbers, they would look extremely strong. That's largely because it's boosted by a 93.5 crore PLI, income that they got, which the company has recorded as other operating income. But if you adjust for that, despite that, there's a near 14% volume growth, 12.8% growth in their revenues, close to 521 crores is what they sold this year, with this quarter rather, with an EBITDA growth of about 10%. Margins too stable at around that 13.1% mark, and the net profit grew by about 22%. Now, if you look at ethnic snacks, which is basically bhujia, nearly 70% of their revenues coming in from there, that grew about 10.8%. Then the other parts of their business, which are fast growing but lower in contribution, like packaged sweets, western snacks and papad, all of them grew anywhere between 13 to 23%. So good growth across all parameters, margins improving, and the company is also diversifying outside of their core states. So those factors are working for them.
Okay, all right, Mangalam, thanks a lot for that. Well, I'm looking at JK Lakshmi Cement, and the numbers look quite good. So on the top line, there was a bit of a degrowth of close to around 4%. So volumes clearly didn't pick up. The other problem was that realizations were down by close to around 4% on a sequential basis. But despite of that, the EBITDA number looked much better. And on a sequential basis, when you see that margins expand and they don't have the support of either operating leverage or realizations, the kind of focus that they're putting in on the cost side is helping them. So they have been commissioning a couple of WHRS systems. Also, they have, upped their solar utilization levels. And that's reflected in the power and fuel costs, which on a year-on-year basis was down by close to around 20%. So these numbers look quite good. Remember, now it's not a small size company. It's a 16 million ton capacity. And they've also announced some capacity expansion plans. So on the back of that, valuations at $82 per ton. The street likes it. Explains why the stock is still holding up with a gain of close to around 3%. But let's turn our attention to the pharma space. Orchid Pharma, well, the stock is under pressure. Ekta joins us to tell us more. Ekta?
Well, yes, a disappointing set of numbers which is coming for Orchid Pharma. So the revenue was up only around 3.4% on a year-on-year basis. And even on a Q-on-Q basis, the revenue did see a decline. It came in at around 217 crores versus 220 odd crores. What also disappointed were the margins, which came in at only 13.3% versus 18.9% year-on-year. The EBITDA came down by around 27% year-on-year. And on a Q-on-Q basis as well, the margins were 13.3 versus 16%. That really trickled down in terms of the profitability, which came in at around 33 odd crores versus 59 odd crores. And this compares to 33 crores versus 29 crores Q-on-Q. So a disappointment which is coming for Orchid Pharma, which has been pretty much a top-down disappointment, with the margins really standing out as the key negative.
All right. Well, Ekta, thanks very much for that. Phenolics Cables, of course, has been a big mover from the word go. Upasana has got details here. Upasana, morning.
The company reported a strong set of numbers in its Q4 FY24, above the street estimates. The revenue saw an uptick of 14% on a Y-on-Y basis in its Q4 and stood at around 1,400 crore, while the street was working with a number of 1,329 crores, which is certainly above the street estimates. The revenue growth was mainly driven by growth in electrical cable segment, which contributes 86% of the company's overall revenues. Coming to this segment, the revenue saw an uptick of 16% on a Y-on-Y basis, while margins dipped 70 basis points and stood at around 12.1%. It is also important to know that the company's share of low-margin communication cables also decreased from 14% to 9% on a Y-on-Y basis. Now, coming to companies' overall EBITDA margins, the margins were down about 30 basis points and stood at 11.6%, while the street was working with a number of 12%, which is slightly below the estimates. The PAT saw an uptick of 6% and stood at 186 crores, while street was working with a number of 145 crores. Hence, PAT also stood above the street estimates. So, all in all, we are
Okay, all right. Let's focus on the bottom of your screen. The US FDA, they have issued a letter to Loris Laboratories with regard to one of their facilities in Andhra Pradesh. And this letter, this untitled letter, is dated as May 16. Now, the reason that the stock, in fact, has bounced off the low point of the day, because Ekta is telling us that some analysts say that this particular unit has zero business for the regulated markets for the plant. And also, in the past, it's faced some US FDA issues. So the impact is not that much, which explains why from the low of the day, the stock has seen a bit of a recovery. So take note of the news, but also with regard to an analyst impact, they're saying it doesn't have a big financial impact on the company, which explains why the stock has bounced off the day's low. For the time being, we slip into a short break. You come back, we'll get chatting with the management of Fortis Healthcare. Stay with us.
Okay, welcome back. You basically have the market, which is down, 50 points. So we started, by the way, with a 50-point drop. Then there was a 50, 60-point recovery. And then there's another leg down, which has sort of come through after the initial couple of minutes of trade. I was talking about how market breadth is a little mixed today, but I think now it's kind of evened out. 1,150 stocks are higher and about 1,200 stocks are lower at this point in time. We have the management of Fortis Healthcare. As I said, it's a hospitals heavy day. So we had Yatharth Hospitals, Max Healthcare. Now we have Fortis Healthcare, which came out with numbers. We have Ashutosh Raghuvanshi, Managing Director and CEO of the company, with us to take some questions. Mr. Raghuvanshi, good morning. Good to have you with us here. Thank you very much for your time, sir. Hospitals have all been doing very well. And, your performance in FY24 indicates that top line went up about nearly 10% or so. So you're at about 6893 crores in revenues. Could you give us a broad outline? If you want to give a specific number, that'll be fantastic. What should we expect FY25 to bring in as far as top line revenues are concerned, sir?
So we expect a similar growth, a double-digit growth this year as well. And that would be basically led by both the volume growth as well as the ARPOB growth. We have a lot of capacity expansion, which we have done. We have added about 246 beds last year, and we are adding about close to 400 beds this year. We'll be creating a capacity of about 700, but we will be operationalizing about 400. So with all this, we expect to be at least in double-digit growth.
Double digit. And the total beds after all of this expansion, etc., where will this number be at, say, in the next 1 year?
In next year, we are adding 700 beds, but we are operationalizing about 400 of those within this year.
So operational beds would be how many total?
Total beds would be about 4,800 at that time.
Okay. Sir, I wanted your thoughts on margins as well, because the hospital business margins have seen a significant improvement to 21%. And in Q4, I think you hit about 22.4% as well. What led to this improvement, and what is the expectation for FY25?
Yeah, so the expectation was that we would have about 70% occupancy, which we did not achieve. We achieved about 67% occupancy. However, the growth in ARPOB was high, and that was a result of the case mix change. We did a lot of high-end surgeries. We did close to about 4,000 robotic procedures, for instance, in this year. The surgical volumes grew by about 8% year on year. And that led to a better performance for the year, and certainly for this quarter as well. We expect this trend to continue. There was some one-off item here. So in the hospital side, I would say that the corrected EBITDA would be 21%, which is what we expected to close the year with. And we expect from here on, we would sustain it and better it as we go through this year.
So you were saying you'll sustain it at about this 21% and perhaps you can even better it in FY25, correct?
That's right.
Okay, fair enough. There is a fear that some of the larger hospitals are seeing some plateauing in terms of volumes. You were talking about how you will see perhaps further volume growth, but you have incremental capex as well coming on board. Would that be a bit of a concern if the entire industry is seeing, slower growth or plateauing of volumes?
Not at all. I think the capacity which is available in India today is still deficient compared to what the requirements are. So whatever capex we are doing is for advancing the technology mainly and the brownfield expansions which we are doing. So we are doing brownfield expansions in hospitals where already the occupancy figures are above 70%. And in some of these hospitals, it's nearing 80%. So that capacity absorption will happen very easily. So that is not a concern. Even in the last year, we did a total of about 700 crores of capex. Majority of it was for upgradation of the medical infrastructure and some of it for enhancing some of the capacities. But that will continue. That is not a concern at all in my view. There is always a seasonality in healthcare business. So this plateauing stage currently should not be seen as a trend. This is only a sort of a localized phenomena which is there for a short while.
All right. Hi, sir. Good morning and good to see you in. Nigel on this side. Let's turn our attention to the diagnostics part of the business. Now, that's been a relative underperformer. If you could tell us why the growth is not as much as, say, some of your peer groups, and how do you see the trajectory going ahead? Do you expect double-digit growth even in this vertical? What about margins? Do you see a possibility that you could gradually move towards that 20% odd?
Certainly, to start with, we definitely have had a disappointing performance on our diagnostic side. The growth has been almost just 2%, which is hardly anything. And that is on because of multiple reasons. We had a lot of challenges. We had also changed the brand last year. All those things impacted our business as well. But we are seeing that the diagnostic industry is getting stabilized now and the competitive pressures are lessening. So we expect Agilus also to do well and have a volume growth. We're expecting about 9 to 10% growth at least, and that would come on basis of increasing our specialized test menu. We have a lot of focus on the genetic testing, for instance, and with all that, we expect to have a healthier growth this coming year, and we certainly expect to take the margin to about 20%.
Okay, all right. And margins to 20% in the coming year itself, that's FY25?
That's right.
All right. And the growth of 9 to 10%, that's the volume number, sir, or the revenue number?
Revenue number.
Okay, all right. Got that out of the way. And since we're talking about Agilus, is there any timeline with regard to the IPO? I was reading a couple of articles just 2 or 3 days ago which suggested that maybe the PEs could want to dilute some stakes. So that's why you could be looking at an IPO. Could you clarify on that front? And what are the timelines about their IPO?
Yeah, so as far as the PE stake in Agilus is concerned, we have all our options open. The IPO for now, we had withdrawn. However, we will look at all the options and take appropriate call in the due course. As you might be aware that we have a put option on us from the PEs for 31% stake in Agilus. And in case that is exercised, we are contractually obliged to buy that from the PE stake. And we believe that this business can further create values. It has been underperforming with some structural changes, etc. And little more concentrated effort. This can go to a next level. So we think that there's a lot of value in this. We will decide at the appropriate time and certainly let you know at that time.
Yeah, absolutely. Mr. Raghuvanshi, that old saga of that IHH open offer, I think the matter is still sub judice. Could you give us an update? Where is that at? I mean, is there anything moving at all?
Yes, that is still sub judice. It is at the High Court level, and the issues we do not know when it will get resolved. But we are expecting that since the hearings are happening at a very good frequency, we should see some resolution happening possibly by the end of the year.
Are you close to close to a point where the final arguments would be made, or it's still away? You're saying at least hearings are happening frequently. Sorry, yeah, go on.
Yes. No, so what I was saying is that the hearings are happening very regularly, and the final argument stage is coming there. So that's why we expect this to get resolved by the end of this year.
Okay, no, got that. Ms. Raghuvanshi, we'll leave it there. Good luck to you. Thank you very much for joining us, and appreciate your time here on CNBC TV18. So good touch conversation with Fortis Healthcare. Markets recovered again. I mean, before with the Fortis conversation, Nifty was down 50-60 points. It's down 10 points now. So at lower levels, there is a bit of buoyancy, which is starting to appear once again. PSUs are doing very well. So Cochin Shipyard, Garden Reach, and so many others, Chennai Petro, I mean, these are some of the top volume-led gainers that we have at this point in time. Well, the markets, of course, also scaled to new highs. Nifty's hit 23,000 early this morning. So how's the journey, this journey been to 23,000? My colleague Hormuz is standing by with some interesting data. Hormuz, over to you.
The journey has been anything but smooth sailing, if I can call that, for the Nifty for these 1,000 points that we've seen between 22 to 23,000. Now, we scaled 22,000 for the first time in January this year. And since then, there have been multiple attempts to retest these levels of 23,000. We went to 22,700, then we corrected to 21,700, then came back, then fell again. And now, finally, we are at these levels of 23,000 for the Nifty. And interestingly, none of the heavyweights find a mention in the top gainers list in this 1,000-point journey that we have seen from January this year. If you pull up that list, you'd see that the Nifty gainers there, Mahindra & Mahindra is the top gainer. They're 41% higher for M&M. Hindalco is the other one. So auto as a theme is among the top gainers, and as is metals, considering the recent rally that we have seen in metal stocks. Hindalco and Tata Steel as well among the top gainers there, and Bharti Airtel finds a mention with the stock also trading at record levels, 20% within this period as well. And while we mentioned that there were no heavyweights, that is also because one of the biggest sectors, that is IT, was among the top underperformers, and 4 out of the top 5 losers on the Nifty there are the top underperformers. There you can see HCL Tech, Infosys, Wipro, LTI, Mindtree, all of them seeing double-digit losses. HCL Tech being the biggest underperformer there, 19% lower within this journey, not participating in the rallies. Also Apollo Hospitals, a 10% drop for that as well. The top gain, they may have not found a name on the list of the top gainers, but the index heavyweights are definitely, in terms of point contributions, definitely find a mention. There you can see ICICI Bank there, HDFC Bank there, Mahindra & Mahindra, considering the rally it has seen, it may not have a very significant weightage on the Nifty, but the move has ensured a 167-point contribution there as well. Bharti Airtel and SBI complete the top 5 in terms of contributors. And on the downside, IT is topping the charts here as well. Infosys there, the biggest laggard during this period, 190 points lower there. HCL Tech, TCS, Wipro, and even Titan is finding a mention among the top underperformers. So it's been anything but smooth sailing for the Nifty between 22 to 23,000, but the landmark is conquered finally.
The IT point is interesting. I mean, of course, sector challenges plus large FII kind of sector, right, where FIIs have been a big seller through the course of this year. Some 1.2 lakh crores net sellers from foreign investors. Hormuz, thanks very much for that. Vodafone Idea, the stock is at the bottom of the screen. It's up 7%, one of the biggest volume-led gainers. And, it's a long line of brokers who've come over the last many weeks and upgraded their rating. But I think the most aggressive now in terms of a price target has been Vodafone Idea, has been UBS this morning, beg your pardon, on Idea, when they say that their target is about 18 rupees. A lot of this, of course, is premised on the hope that tariffs will go up 15-20%, and maybe even more by the end of the year. But immediately post-elections, you will see a tariff increase. So almost a consensus kind of building around that expectation of what happens next in the imminent future. So that is $15 on Vodafone Idea after some time. Well, it's a wrap on this edition of Bazaar as well from all of us here. It's goodbye. Thanks very much for watching. But stay with us. Chartbusters will pick up on the action in just a bit.